staying well during these crazy times. So much going on around the world, and I just hope that everyone is doing fine. That's just my personal message. I know there's so much uncertainty right now. We're seeing it in the in the way the world is working. We see it in the way of this health pandemic. We see it in the way of policies being pushed out. We see it in the way that the markets are reacting to it. I hope everyone is staying well during all this, because it can be trying. As I work with our traders here, this volatility has really presented some great opportunities, and that is kind of the exciting part behind all of it. So with that, I want to share some of that with you guys today, and I want to share with you, just how I got started trading. I'm going to talk about the tools that I use, and I'm going to share my personal story with you. Some time ago, my family had encountered some tragedy, if you would. My mother had gotten sick and passed away, and I was left to contend with a lot of our family issues, and there was a lot of instability and a lot of debt and a lot of volatility in my life. And I had turned to trading, thinking that was gonna stabilize things for me, that it was going to stabilize things for my family, stabilize the debt, stabilize the obligations. And in the beginning, it was exciting. And then I quickly learned that I didn't quite know what I was doing. And that was unfortunately a painful learning lesson. But with that came obviously, my ability to become who I've become today. It was another hurdle in my life, and I went out and spent tons of money on education and tons of money on indicators and software packages and anything you could think of. I blew up a few trading accounts, and I'm not ashamed to admit it. It was part of my journey. And it brought me to be a better, stronger trader that I am today. And I want to share with you that once I found this company called Hawkeye, the company that I'm here to represent today, the company I'm here to share with you about, how it changed my life. It changed the way I viewed the market. It gave me the insight to what was going to lead price action. And what leads price action is always, of course, volume. So having a suite of indicators and a methodology that was built around understanding volume and how it made the market become what it did before it actually happened is what brought me full circle. Once I understood how the market worked, the directions in which it traveled, why it traveled, it was easier for me to sit back and develop the trade plan, the strategy, the discipline, and the consistency that any trader needs to be profitable. And as that happened, there was a learning curve. And the reason I've gotten involved at this point with Hawkeye to help others with the learning curve is because it was painful for me. And I realize why a lot of people that start to trade end up quitting, because they can't endure the learning process that comes with it. When I have friends approach me and they go, "Oh, I want to trade." Well, when you go to the doctor, the doctor didn't just approach his friend and go, "You know what, I think I'm going to start practicing medicine." There's a learning process. There's a learning curve. There's experience that comes. There's knowledge. There's discipline. There's consistency, continuing education. So people are like, "Oh, just teach me. It can't be that hard." Listen, you have to have a great understanding of what's happening before it happens, and that's exactly what we do here at Hawkeye. And we've built this system we call VSwarm, and what VSwarm is, and that's what I'm going to show you in just a few minutes. What VSwarm is the indicator tells you when the market is about to turn. And if you understand when the market's about to turn, it's easy for you to implement the other tools we have. It's easy for you to say, it's time to enter. It's easy for you to manage the trade because the probability is stacked in your favor. And when you have all that, it just simplifies the process. I spend a lot of time with our traders, working with them on just how to stay focused. And that's not always just so easy. So let me just roll forward here, and we're going to talk about what we have to share with you today. My computer will cooperate. Sorry. Okay. So of course, before we get started, I do need to share with you that trading does involve risks. It does also involve reward. We at Hawkeye always preach that you should prove whatever your trade strategy that you build to be profitable in a paper traded or simulated account before you, in fact, move forward with trading real live money. It's a big step in the process of understanding what's happening, how it's happening, and understanding that also hypothetical and simulated performances don't necessarily reflect actual real life market performance. So this is a quote from a guy by Richard Nye, and some of you may know who he is. Hidden behind the facade of the pompous jargon and noble affections, there is more sheer larceny per square foot on the floor of the New York Stock Exchange than anywhere else in the world. What does that tell you? That tells you that there's extreme volatility, there's extreme action, there's what happens on the floor is not your common everyday workspace. So our objective is to understand what's happening on the floor while we're trading the market at home. And that is conclusively what our entire indicators are built around. So who is this for? Who are our products for? What is this vSwarm for? What is this system that we built, and who is this for? Who can use it and who can benefit from it? So we invite new investors all the time to work with us because we're willing to come full circle. We don't want to just sell you an indicator package and then you walk away and don't do anything with it. We want to teach you how to use it. We want to implement the methodology. We want to implement the training. We want you to understand what the indicators are, how they work, why they work, what they do, so that you have a great purpose around it. Experienced traders will find value in our indicators because we are delivering you a volume-based indicator that doesn't exist anywhere else out there, and it will tell you very simply what the market's going to do before it does it, because volume does lead price action. People that are retired, that are looking to just increase their quality of life. Listen, to retire today is not the easiest thing to do. Life is expensive, and it's not getting any cheaper by any means. Whether it's taxes or cost of goods or just your overall cost of living. What somebody planned 50 years ago to retire on is probably not enough today. And somebody who's planning on what they would retire on to need to live today in 50 years from now or 20 years from now or 30 years from now, whatever the time frame is, it's probably not enough at the rate inflation's going. Parents and grandparents that are interested in building a fund for their children or grandchildren, for colleges, to help them get a head start in life so that when they do get their education, they don't leave their education with debt. This is something that I've personally done. I've invested in my 401k or my IRA. I have a couple of different accounts set up. One account that I trade on that I take that money to live on. Another account that I trade in that money goes into a retirement account. So I split my position into two different accounts, and the reason I do that is so that I can stash some money away, and then I can have some money to live on. And it doesn't matter what size your account is. If you have a small account for a few $1,000s, or you have a large account for a few $100,000, irrelevant. Understanding what the market's doing, how it's doing it, when it's going to do it, why it's going to do it, is valuable to anybody. It doesn't matter if you're trading with one contract, one share, one option, or you're trading with hundreds of thousands. It doesn't matter. We see anybody from all the way up to, institutional investors and traders that find value in understanding what the market's going to do before it does it. And, you guys should too. And there's no reason that not having the greatest understanding of what the floor is doing before it does it will not benefit you in any way, shape, or form, because I promise you that it will. This took me from 10 years ago. I had 4 mortgages, I had car payments, I had credit card debt. Fast forward my life 10 years, with trading and being disciplined and saving money and paying off my debts, it was able to transform my life. I mean, 10 years ago, there was always the threat of bankruptcy. God forbid something had ever not gone right. I mean, there was really a great threat of disruption in my life. And today, the threat of disruption is much less. When this pandemic came along, was I happy about it? Of course not. None of us were happy about it. Did I survive it better than some other people that I know? I did. And I'm not saying that to brag. I'm just saying it because I was able to put myself in the position to do that, because understanding how the market worked gave me the edge to really changing the security of my financial future. So that's what I want you guys to understand, that it really does evolve, what you can do for yourself, for your family, and for your future. So as a professional money manager with 200 million under management, you found the Hawkeye system to be an indispensable tool in my investment research. Whether you're just starting out or a seasoned investment manager, his knowledge and how the market works is transforming. This is from Max Larson. So wouldn't you want to have the same tools that a guy that's managing 200 million has? Maybe you just got a $2,000 account. It doesn't change the ability to apply the tools to be productive, to be profitable, to be disciplined, to be consistent. I'm going to show you in a second just how easy it is to identify how you could have, snagged 5+% on TK Tankers, or 7+% on QEP Resources, or 9.5% on Regal Pharmaceuticals. So let's look and see what happens here as these indicators transpire. This looks like your standard, S&P bearish breakout. We have a line in the sand here. We finally get a close below it, and most people have been taught or disciplined to, hey, listen, when we get a close below this break, it's a bearish signal. It's time to get short in the position. And when we start to look at what our indicators offer as it's reading the market, so it's telling us what's actually really happening, even though the bar is closing below where it opened. If you take a look there, you can see how much buying volume had become present in that bar. So what's really happening here? What's really happening here is this is where the institutional buyers, the banks, the big boys, the buyers that well outweigh us little retailers, are building a position in this market right here. See that? They're building a position here so that when it breaks, it pushes the market back up. This is what most people would have said it's time to get short. But the reality is it was a buying opportunity. And how did we know that? Because volume came in and told us. Volume precedes price action. If you see a bearish candle occurring and you see buying coming into it, don't go short there. This indicator would have saved you from a losing trade, and not only saved you, but afforded you the opportunity to take a winning trade. So whether you trade with one contract and $250 makes you a great day's pay, or you trade with 10 contracts and $2,500 makes you a great week's pay or month's pay, whatever, however it's applicable to your life, this opportunity was presented because volume told us not to go short. Here's Diamond Offshore Drilling, 9.5% on 2 moves. Peabody Energy could have afforded you 3+% on just a couple hours. Winnebago Industries, two opportunities to bag almost 13%. So this is Vana. She was a nurse who retired back in 2018, and she had no trading background and knew very little about the market. But she just knew that there was opportunity. Like I knew there was opportunity. Like many of you who are on this, webinar today knew there was opportunity. The reason we get involved in the market is because we're looking for that opportunity. Once she was able to get involved and with the right indicators and just following the rules, she was able to replace her nursing income. Now, I have friends who are nurses. I have friends in the medical field. I have family in the medical field. I know that if you work in a affluent area in the medical business, a registered nurse makes a substantial amount of money. So if she's telling me that she was able to leave that job, buy herself the freedom of having the same income and controlling it on her own terms, that to me is a pretty satisfying and exciting opportunity that life has presented her. I want to talk about Randy Lindsay for a minute. Randy is so Nigel, our friend Nigel, is the one who founded Hawkeye. And the way Nigel founded Hawkeye was he invested $100,000 with a financial advisor, only to find shortly after that, well, he didn't get his 100,000 back. In fact, he lost it all. So Nigel lived in London and went to the London Stock Exchange. At that visit at the stock exchange that he spent several weeks there, he spent time on the floor. He spent time socializing with the traders. He went to lunch with them, dinner with them, bought them drinks, wanted to understand what he and his financial advisor didn't have at home that they had on the floor of the stock exchange. And it was them understanding the momentum of the floor before the price moved. So when Nigel built Hawkeye, when he developed these indicators, he developed them to understand what was happening on the floor of the exchange before it happened. And that's how Hawkeye was born. So fast forward a little bit, Randy comes into the picture. Randy was a rocket scientist for the United States Air Force. He was contracted and hired by NASA. He might possibly be one of the most brilliant people I've ever met. So Randy, leaves his career, starts this business with a couple of venture capitalists, and him being the brilliant mind and them being the business side of it, they basically stole his business from him, and Randy was left to recover from that. So with all that, he found Hawkeye. He started trading. He was making money, losing money, suffering to find consistency. But he knew he didn't want to go back to work for somebody or with somebody because of his previous experiences. So once he got involved with Hawkeye, he simplified the three-step entry. And that is basically exactly what vSwarm is today. It's a simplified version of the Hawkeye tools. And with that, it is easy for him to have replaced his incredibly lucrative, job and business with just becoming a full-time trader. So having Randy on staff was just amazing because he turned everything around. So if you looking at this chart, this is what vSwarm looked like in the early days. I mean, this can be overwhelming to somebody who especially is new to trading. So what we did and what Randy did was say, listen, let me take the most pertinent information here on the screen and build it into a simple, lucrative, three-step process that doesn't require you to understand every single component of what is happening on this screen right now. Because like I said, it could be, for most people, a little overwhelming. And our objective isn't to overwhelm people. Our objective is to make them simply successful. And I've preached this with my teachings here at Hawkeye that the simpler and more decisive your trading plan is, the easier it will be for you to continuously execute it over and over and over again. And that's what's important. Not complicating the hell out of it that you can't even focus because you're so distracted by everything on the screen. So this is what it looked like years ago. And this is kind of what it looks like today. Pretty simple. We have our chart here as it transpires. We paint the bars with the volume as they close. We have this indicator down here called the heat map. And what the heat map is doing is taking the temperature of the market as it moves along on 3 different time speeds. Each time it plots a color, it's calculating 3 time speeds before it plots it. So it's taking the temperature of the market before it makes the move. Here we have the V-swarm, which is the volume. We see when the volume is coming in. As it breaks in, we know what's going to happen before it happens because volume leads price action. Now we have the trend module. See that little green dot right there? Each one of these dots takes 300 calculations into consideration before it plots the dot. So what does red mean? Red means to short. What does white mean? White means congestion or indecision. What does green mean? Green means it's time to buy. As it pops up right there. So it's 3 steps. V-swarm, heat map, trend dot, V-swarm, heat map. Whatever order you want to put them in. It's 3 pieces that you need to understand, and they populate all on their own every time a bar change closes. Now, it doesn't matter if it's a 1-minute chart, a 5-minute chart, a tick chart, a 20-minute chart, an hour chart, a daily, weekly, monthly. It doesn't matter what time frame that you want to trade in. It doesn't matter how you want to build your trade plan around. I'm a passive, what I call a passive swing trader. I use higher time frames because I don't want to sit in front of the computer. Not because I'm not able to day trade. I did that for years. I just want to have a little more freedom in my life. If I want to go play golf or go fishing or do whatever I want to do, I want to know, hey, listen, I don't have to look at the charts again for a couple more hours. And if I do, I know in 30 seconds if I have to make a decision or not, and then I can go back to getting on with my life. To me, trading is all about freedom because remember, I came from a place where my life was very, very consumed with stress and restraints and debt. And I don't ever want to go back to that place in my life. So as you can see, as this developed here, we had our trend entry, we had our V-swarm, we had our heat map. You could see how it developed into a movement that produced a profitable trade. Now you can manage the trade as it moves along, and we have several different management tools, but a stop will populate underneath this, and you'll know when to get out. So you can ride the extent of the wave. We always want you to have a great risk reward tolerance, and that's something that we teach and preach. But an easy 8+% return, is not a terrible thing to take. So here's a chart of the Emini, and we see what's happening. We have 3 things lining up. We have our trend dot. We have our V-swarm coming in. Our volume is telling us there is a great presence here of sellers, and we have our heat map click over to bright red. Like I said, the heat map is a unique tool because it's measuring 3 different speeds on the exact same time frame. So it's interesting to see how it can go from bright red to dark green, back to dark red to bright green. So it's really taking a very advanced calculation of what's going to happen. You see how it focuses right here on it's turning. And sure enough, the market continues to sell off. So as you see buying volume come in strongly, you would know it's time to get out. That's all. There's just a shift here in buyers and sellers. When the sellers are in control, we want to be on the short side. When the buyers are in control, we want to be on the long side. It's just that simple. Could have easily made $330 per contract traded. And that is all relevant to your own risk reward tolerance with each trade that you take. So this is from Michelle. And this is her trade screen, how she has it uniquely set up to herself. It's just a base hit that she took using the Hawkeye 3-step method. And she took the signals on the E-minis, although she's trading off of the micros. And it was just a picture-perfect opportunity for her to take some profit. Now, guys, these base hits done over and over and over again start to add up. And as they add up, you can simply start to see your account do just the same. So this works on currencies also. This is the British pound versus the New Zealand dollar. You know, we see the presence of things lining up here. Our 3 steps. We have heat map, we have volume, we have trend dot coming in. See how that all lines up there? As that happens, we see the trend start to develop. We see it turn. Now, before this transpired, take a look down here at this bottom. We call this a green bottom. Now, why do we call it a green bottom? Well, A, because it is a green bottom, but B, as the market bottomed out, the presence of buyers outweighed the presence of sellers. So when we see this green bottom, the likeliness is that this is a very high probability of a turning point. So when that transpires, and then your 3 steps line up, it can quickly show you just how confirming this price move can be. And sure enough, that's exactly what it did 130 pips later. Like I said, as this happens, a population, a stop will populate and you will follow it along. Here's another Hawkeye user, Tam. This is 53 pips that she grabbed off of the same currency pair here, the British pound and New Zealand dollar. I mean, she was able to get in, get out, take her money, and move on with her life. Sometimes it's nice to know that you could just make a day's pay and move on. And if you make a day's pay over and over and over again, you will quickly see your account grow. Now, who knows and understands the rule of 72? Anybody who's ever sat with a financial advisor or made a financial plan understands what the rule of 72 means. The rule of 72 is the number, 72 divided by your annual fixed rate of return equals the number of years it will take for you to double your investment. So today, for you to go buy a bond, or try to go get a CD, I don't even think they exist today at 4%, but let's say hypothetically they did. If you put your money to work at 4%, it would take you 18 years for your money to double. The reality is you might struggle to even find 2% today. And if you took it at 2%, it would take 36 years for you to double your money. Now, most of us don't have that kind of time or enough money to invest today that in 36 years it validates tying up that money for that length of time. So what do we do on a shorter term scale to increase our rate of return and decrease the amount of time it takes to double our account? So at 6%, it puts us at 12 years, at 8, 9, at 10%, 7.25 years, and 12% at 6 years. So we still don't want to wait 6 years. We want to consistently compound small base hit trades. And if with that, utilizing that theory, you can simply start to double your account much more quickly. The idea here is to take $1 and turn to 2, 2 to 4, 4 to 8, to compound that return. So as your account grows, you too can grow as a trader as you enter your trades. When you compound your money, like you compound interest, the money grows much quicker, much more rapidly, much more aggressively. If you can understand that concept of just how that works, you too can say, all right, systematically, I'm going to increase my account over and over and over again. That's the objective. The objective is to shorten the amount of time by raising the annual rate of return. And by actively trading, it gives you the opportunity to do that as opposed to just parking your money in a bond or parking your money in a mutual fund or parking it into a CD or wherever you want to put it. Now, I'm certainly not saying that you shouldn't be diversified in how you park your money. I will tell you personally, I am diversified in how I park my money. I do have some CDs, I do own some bonds, I do have a financial advisor, I do own some income producing real estate holdings, and I do actively trade. So the objective here in life is always to have buckets and streams of income, and the more buckets you have, even at variable rates of return, your money is always producing you more money in some fashion or another. And that is how the root of the rule number of 72 works. I wanted to spend a little time on that because it's relevant to how you're going to actively manage yourself moving forward. So here's another stock in Corp, that presented just a base hit 4% return and another base hit 6% return. So if you can get 10% on two relatively insignificant trades, two day trades, you could never go get 10% on your money in the bank or any other passive investment strategy in such a short period of time. And that's the objective. The objective is to create that return for yourself over and over and over again. So this is a tool where you are in a structural way and confident to just follow the rules. I'm sitting here watching my screen and I can almost predict what's going to happen in the next 2 or 3 minutes on the ES, meaning the S&P E-mini. And sometimes it's just like printing money. So when you understand what's going to happen, when you see that green bottom, red top come in, when you see the lineup of your trend entry, your V swarm, your heat map, sometimes it's that simple that you just know, hey, it's time to get in, it's time to grab me my return for the day, and it's time for me to move on with my life. I don't actively day trade like I used to. It was something I really did for a long time. And as soon as I was able to grow my account to a certain size, it just made more sense for me to play on a larger scale, seeking larger returns out of the moves that I was looking for. So it became, instead of being so focused on just grabbing a few percent, it was because my risk reward tolerance changed, I was able to take larger, longer term returns. Like I said, the beauty of the indicators we use, the methodology we teach and preach, is that you are able to apply this to really anything and everything that suits you the very best. And that's where this product is so universal. United States Oil Fund, 3.5%. This transpired, in the morning here and out the next morning on the open. This is not a long holding period to get 3%. If you want 3% on a CD today, you probably got to tie up the money for 10 or 15 years. Here it's temporary. It's less than 24 hours. Pro shares on an ultra short position, another 3%. Here's just a shot of one of our Hawkeye members, how they just want to send us their trade, so we have a great view. We love seeing them come in and show us how they are applying the tools we give them and the things we've taught them to real life. So, I get these all the time, almost daily. Somebody sending me a picture of a chart and saying, hey, look at how well I did, or hey, how come this worked like this and not like that? And, it's just a great way for them to have a perfect understanding of how it happens before it happens. And that's what volume does. It leads the indication here. Heat maps turns over, we get our buy signal. Here's our green dot to go long, our trend entry. Here's our supporting volume. Here's our supporting heat map. 64 pips. Okay? With Hawkeye, trading is easy. Just wait for the setup and there you go. Thank you, Hawkeye, for making trading very easy for me. I said this before, I'll say it again, and I'll probably say it again before I get off the line with you folks today. The more simple your plan is, the more well laid out it is, the easier and more consistent you'll be able to be disciplined in taking these moves. It really is that simple. Here's 4% Eagle bulk shipping. Trend dot clicked over. Volume was clearly present. V-swarm was, you could see how we had some selling. Market was kind of flat. And then all of a sudden, the buyers swarmed into the market. Heat map turned over, 4%. It's not difficult. Another 4.5% on lithium motors. Here's where your green bottom came in. See how it tested below and it failed? The buyers stepped in right here. The buyers stepped in and said, nope, this is where we found value in this stock. So now we just wait for the calculations to line up and give us the entry. And then we take our 4.5%. This signified it. This solidified it. This here told us that the buyers are not going to allow this to go any lower. Right here, trend reversal, little congestion here, sideways, things click in, we get an easy 2%. Not huge moves, but they don't have to be, as long as they just continue to compound. Gold, position built here, everything clicked over, and we just wrote it out. $1,140 per contract traded in this trade. So guys, here's Apple. This is a long-term chart. Remember I said to you, I'm not a day trader anymore. I'm more of a swing or position trader. I'm more actively a swing trader than a position trader, but I do position trading as well. The bulk of my trading is what I call swing style, days to weeks. Some of my trading is weeks to months, but not most of it. Most of the time, within a couple of weeks, I want to cash out and I want to, wait for the next opportunity to present itself. But here's where you could have got into Apple a good while back and taking yourself a really, really generous return. Look at how $1,000 turns into 35. Listen, you waited a little while for it to happen, but it was well worth it. Here's another move here, 27+%. See how the volume came in? We just had to wait for everything to line up, and when it did, we simply knew what happened. We didn't exemplify this sell-off, but same thing here. Volume came in, heat map came in, and the sell-off. It doesn't matter which direction the market goes, as long as it's going in a direction, the volume tells us what is going to happen. Okay? Pretty simple. And by this, what I mean here, and just so I'm clear, is this would be leveraging some out of the money call options that you would use such a small amount of money to buy cheap call options and let it ride. So if you're an options trader, you need these tools also. You need these tools to analyze the market. You need these tools to know when it's going to turn. And if you say, I don't want to own the stock, I don't want to own the futures contract, I don't want to be committed to that, but I do like the idea of buying a call option or buying a put option that limits my risk only to the premium I'm paying for the contract and leaves me almost unlimited upside potential, whether the market is going up or the market is going down. So whatever your style is, it's okay. Chipotle, 56%. I mean, that's a ginormous move over a couple months. Cheap out of the money call options could have turned, into a incredible year's worth of income. Volume called the 2009 bottom, called the 2011 pullback, 2015 pullback. Look at how strong that came in. 2018 pullback. Look at how the volume engulfed, this green bar engulfed almost two complete red bars at the bottom. The financials, the utilities, the basic materials, Google, ginormous run. over these several years where your opportunity was to get long. Apple, this long trend on how volume told you where things were turning over and control was taking place. Amazon, I mean, there isn't a person in the world who has not heard of Amazon or ordered something from them, or at least had some exposure to them. So what do we have to offer you today? The Hawkeye Mastery Academy, which is going to give you all of the trading rules you need to use the tools we have. The 3-step method, which is going to simplify your entry, exit, and trade management. The 6 ways the market moves. We're going to train you on just how you need to understand what the market does before it does it. The trade steps. We're going to teach you and help you understand how to get in, how to get out, and how to manage your trade. How to deal with congestion, because the market is in congestion almost most of the time, and you need to understand how it works and how to trade it. And of course, risk management. There's always preservation of capital, and we want to talk about that and use it as, and understand it as frequently as possible. So this is from a Hawkeye Master Academy attendee, and he basically just preaches how it was easy for him to go from start to finish, utilizing what we have to offer. He thanks us and compliments that it's well done. Steve Hears, same thing, comes in and tells us, hey, you guys have given me amazing exposure, and we're happy for it. So that's valued at $29.97. We do weekly training labs, which I'm going to be part of, where I'm going to teach you on the live edge of the market what's happening, how it happens, when it's happening, why it's happening. And that is another value of $19.97. We have the inner circle, where you get to interact with the members of Hawkeye, with the owners of Hawkeye, with the mentors in Hawkeye, and it's something that we're involved in on a regular basis so that you have constant access to us around the clock. And that's another value of $19.97. So we're stacking in the value here. This is just another compliment by somebody who's learned a lot from what we had to share. So now you're going to also get the V-Swarm with the trends and stops. We're going to give you the indicators you need to implement everything we have to share with you. It works on TradeStation, TradingView, NinjaTrader, and MetaTrader 4. The software is absolutely fantastic. The closest thing to the Holy Grail I've ever found, Richard says. And you can't go wrong with those dots because they just make me money over and over again. So this is another value here of $19.95. So it brings our total value that we're offering you today to $89.90. So if all this did was make you a couple easy trades, is it worth it? Enable you to have a better retirement, some more stability? And if it cut your screen time down, would that also be worth it? If the tools are structured in a way to be confident to just follow the rules and understand what's happening before they happen. So this is the value that we're offering you today for just a total offering price of $14.95. So guys, if you're interested in learning more, if you're interested in having access to the greatest volume tools that exist, I encourage you to click the link below to review everything that I've offered you again today and to get started with us as soon as possible. If you have other questions, please feel free to call my support staff, 888-233-8598, and we would all be more than happy to see you become members of the Hawkeye family. I appreciate your time that you've carved out of your day for me, and I want to thank you. I hope you are all staying well, and I hope you are all staying safe during these unprecedented times. Thank you very much.
So glad to be with all of you. A lot of great speakers today here at InvestorExpos. And bottom line is I want to talk with you about how to target up to 300% gain potential with $1 options. Now, this is definitely my most aggressive strategy. I'm going to teach you with options today, and I've been trading options for 30 plus years. Got started after I graduated from Duke University in 1989, and kind of thought I knew it all in the first year or two of my trading experience, and paid a heavy price for it because I wasn't listening to what the market was telling me. I was trying to go off of fundamentals, looking at what are quote good quality stocks, and then buying options on them, and then getting creamed on them because the technicals weren't backing me up. So I switched to much more of a technically driven approach pretty quickly, and really the chart tells the tale. So everything I want to walk you through is about how to read the charts the big trends way. I launched Big Trends back in 1999, so we're on our 21st year here. And bottom line is that I've learned a lot about not just what to do, but also what not to do. So hopefully that will be imparted to you over this quick time together. Just a reminder that everything that I share with you today is for your information and education only. That you remember, this is not a specific recommendation to buy or sell any particular investment here. It's all about education today. And bottom line is that that you are solely responsible for your own investment decisions. Big Trends and staff are not responsible for any trades you choose to make. Big Trends, we don't provide any personalized financial, tax, or legal advice to any individual. What we do instead is send out real-time emails and text alerts when we get new signals to get in and out, and you decide how you want to implement it. And you can't even implement it automatically with something called auto trading. More about that at the end. But we just finished the World Series. The Dodgers won. Congratulations, LA fans. But bottom line is that we're going for something here where we're not going for first base. If you know the baseball analogy, try to get on base is what most people are focused on. And I see that with a lot of traders these days. Everybody seems to be happy trying to take 20 or 30% gains when you're missing the much bigger opportunities to make doubles, which of course second base is a double in baseball terms, a double in options terms here, 100% on your money. Anytime I can get 100% of my money, whether it's a stock, an option, or any other investment that I make, I sell half of my investment at that double. Why do I do that? Because you get your risk capital back in your pocket. That makes you a lot freer on the remainder of your trade, what some people call the free trade. Other people say it's the market's money. No, it's still your money, folks. But you want to give it a chance to run to a triple, which is a 200% gain. I sell half of my remaining investment at a triple, and I sell the final piece. So I've sold half out. I got another quarter out at plus 200, and the final quarter I sell at plus 300. That's the home run, the grand slam, as I call it, in the grand slam. In baseball terms, that's when all the bases are loaded and you hit a home run. That's called a grand slam. You get 4 quick runs off of one swing of the bat. And so the point being that one of these trades that can make you up to 300% on your money can drive tremendous gains, even if you're starting with as little as 4 option contracts. When we talk about a dollar option contract, that means that multiplied times controlling 100 shares, that means for $100 or less, you could be controlling 100 shares of stock on a $1 options contract. So dollar times 100 shares, that's $100, or sometimes these come out at less. And what would the result have been? Obviously, past performance doesn't guarantee future results. It could be better or worse. But point being that over the last almost coming up on 4 years, that we on options that are priced at a buck or less, saying okay, a buck or less, meaning we put $1,000 or less into each trade. Never more than $1,000 in a trade, we'd be from a $10,000 account up to $33,551. So $23,500 profit before commissions. As you know, commissions have come down to next to nothing for stock and options traders. And so it's really tremendous time to trade, better than ever before. And we're seeing that the individual stocks is where the action is now in 2020, even more than before, where everybody was so focused on the index, what the S&P is going to do. As you know, it's a different market now and will be going forward based on the pandemic. And, we pray for everybody's safety and to be healthy, but also ultimately to take advantage of these opportunities that the market is presenting you. So when you learn this stuff, you can see how powerful it can be. Case in point, AMD, Advanced Micro Devices. This is one that we traded back in July as an example. And you can see here that we didn't trade the first breakout in July. So a lot of times the big trends method is that don't just trade any old what looks like breakout. If you put a question mark up here, what looks like it's trying to break out here, you try to get ahead of the breakout, that's a mistake because that's a fake out here. and it's coming back down. What we want to see is that when it first looks like it's starting to break out again here, question mark, is do we get what we call confirmation? So you see it bumping along there, and then it closes above that first, what I call setup bars high. So the setup bars where you should be saying, hey, pay attention, let's see if it can follow through, if it can actually break out. And so AMD is one that we bought then after that confirmed breakout there, got into it there July 23rd. You can see here that at that point we're saying, look, now we want to be on board this. And the first day it didn't do much. It was even a little bit against us. Part of what I want to teach you in this aggressive options method is that you don't just put any old price stop out there to get tagged and take you out of an otherwise good trade. We give it a time stop, and I'll talk more about time stops as we go. But you can see here, that's our first day in the trade. We're down a little bit. The second day in the trade, we're now up 100 and 200% targets being reached as AMD. You can see, what do we buy, by the way? We bought a 75 strike call here when the stock was trading here at around 62. You say, well, why are we buying a 75 strike call way out of the money? Because we want to pay $100 or less per contract. That's a $1 option. Costs us $100 on each contract. So if we're putting $1,000 in, that gives you a 10 lot. If you're only going to trade 4 contracts, you could do it with as little as $400, or sometimes less if we recommend something under $1 a contract. Point being also that what we've got is the indicators on this page. We're going to talk about it. The CCI, the percent R, and the ADX. They were all lined up and saying all systems go. Took that 300% out the next morning and boom, booked it, took the money and ran to the next opportunity. Don't get caught in a hope mode, folks, of hoping that something's going to work for you. You got to take the money as the market makes it available to gradually. Once your final target's hit, you get the heck out and move on. Now, the word that I think is really hurting the traders the most in this current market is the 4-letter word, worse than any of the other 4-letter words, is fear. Fear is hurting so many people because it's making you miss opportunities. So I'm glad you're here to get educated at this excellent event. But remember that when you're taking an aggressive approach, like Babe Ruth is the ultimate probably icon of baseball back almost a century ago, he held that 714 career home run mark for a long time until Hank Aaron broke it in the 70s. And the point being that he struck out almost twice as much as he hit home runs. But yet he won 6 championships, and he said, look, he swings big, he misses big. I don't like to miss big. So we still have rules that we want to put in place that if it's not working, we can get on with our next trade and not get a total strikeout as much as we can avoid it. But sometimes those total strikeouts are going to happen. You have to trade with risk capital and not overcommit your capital no matter how good the trading has been. Also, if you're worried about the next pandemic wave, I want to remind people we made money in March for our Grand Slam subscribers on the month, even when the market was down. And ironically, the way that I did it was not so much buying put options, betting on the decline, because they were getting very expensive there during the decline in March. But I found a name like Kroger that I traded 2 different times here. March 5th and again March 17th. The first time we caught it for right around our double target, sold the first half at 91.5%. And then the next day it rolled over on me, and you know what? I only got a 10% gain in the second half of my position. That doesn't sound like much, but add up 91 and 10 divided by 2 on those 2 halves, and we ended up in the neighborhood of about 55% gain for a day and a half's work. Not bad, right? I'm not a day trader per se, although this next one you can see on the 17th, out on the 18th. I said I'm not going to let it slip away this time, and was seeing how the market was in the tank and saying, okay, we're going to just take the rest of our position off the next day at 192%, average 96% over that day and a half before we don't get creamed by it coming back down here. We missed that next wave down. We're going to talk about all these indicators in a couple minutes, but point being that don't let your worry about the market keep you away from opportunities. There will be opportunities on the upside and the downside, and there will be times where the market's choppy and I'm going to stay on the sidelines. I actually just made a new recommendation here this morning about an hour ago that you can take advantage of. It's still fresh when you get signed up, which I'll tell you how to do that at the end too. But reminder that indicators are important. As I said at the beginning, I made kind of the classic mistakes when I first got into trading of basically buying and holding on something that I should have been in and out of that wasn't working, and saying, okay, you know what, indicators that tell me when I'm on the right track include the commodity channel index, the CCI as it's called, but I'm using this on individual stocks. I've shown it works really well on growth stocks, in particular the big tech, healthcare, biotech, and the other big growth names out there that really drive this market on the way up and on the way down. And so the bottom line is that you say, okay, it's all about uh, how we can take advantage of this. And so, okay, the CCI is different than most other indicators because it factors in not just the closes. A lot of moving averages and other tools you look at are just looking at close to close action. I want to know how the high was, how the low was, how the close was on each bar. And CCI does that and comes up with what the creator Donald Lambert called the typical price. And this is basically turns into a momentum indicator. The biggest thing you're going to learn from me today, outside of how you can start really profiting from these Grand Slam options opportunities, is overbought is a word that is misused by most traders and investors. It is overbought implies that it's gone too far. And what I've found is that, let's face it, you and I know as individual traders that it's the institutional traders and investors who are truly driving the market. It's the billions of dollars coming in or out of these stocks that will run them to big heights or crash them down. And so our job is to get in tune with what those big whales, if you will, are trying to do. So when you look at, like, for example, the CCI indicator I just shared with you, when it first goes over bot here, this is the blue going to yellow line here. That's also where the percent R, which is this red line here, is also going over bot. Okay, so the percent R, I'll put an R by it, is the red line here. So that's what's called percent range. We'll talk about that in a couple of minutes. The CCI, I'll put a C by it. This is the commodity channel index. The ADX is the green line here. That needs to be trending up here. You can see all those together are starting to move in the same bar here. So do we buy right here where I put a question mark? No, we say, what's going to happen next? Last time it tried to get going here on the upside, you can see that it failed, did not confirm what we wanted it to do, getting through this resistance. It couldn't get through it on a closing basis, and we say stay away. This bands, by the way, is what I call my big trends bands. I'll tell you more about that. So what you do is you draw a line across that support, which is, or that resistance in this case, about 19 and a quarter. The day after it closed above at 19 and three quarters. We're in there buying this next morning here. So 19 and three quarters, what option do we buy? We want to buy something that we can get into for $1 or less, and it's usually out of the money. In this case, it was not that far out of the money. It was a 20 strike call. If you're new to options, it means you got a right to buy Barrett Gold is a stock, right to buy Barrett Gold at $20 when it's trading at 19 and three quarters. Why would you do that? Because you're betting that it's going to go a lot higher and that right to own that stock is going to be worth a lot more. We only paid 59 cents. That's $59 on 100 shares per contract. So if you're buying a 4 lot, that's less than $240. And then you can see the very next day we're cashing in for a double, and saying, okay, look, thank you very much. We'll take that double. Then we're waiting for our 200% target. We don't get it. Then we walk in the following Monday morning, and you can see, look, it closed the part day about 21 and a half. The next day it opens up here 22 and a half. So here the stock's gone from 20 to 22 and a half, just up about maybe you call it 12%. And we just took our final two pieces out there for a 289% gain. So we're making nearly a quadruple off of just about a 12% move in the stock. Think about that. You're looking at a magnitude of leverage in the neighborhood, as you can see here, of pushing up to about, 25 to 1. So it's really tremendous when you can make 20, 25 times your money for about a 4 trading day move versus if you had just bought the stock. You can see why the power of options is so appealing to so many traders and investors. And now ADX is developed by Wells Wilder, same guy that developed the RSI indicator. And here's another one that's a trend indicator. It uses another tool called directional movement to look for the positive directional movement, which is the net new highs, negative directional movement, net new lows. So if you get a lot more new highs, so the positive directional movement's going up, the negative directional movement is going down, that means you're not making any new lows. That's called an uptrend, right? You know that's going to lead to a sign that we're getting a trending market and the ADX is going to be rising. So let's talk about that for a second. Another one, case in point, tied to the pandemic back in mid-July that I recommended was AstraZeneca calls. A lot of these companies now, of course, their trials are getting halted or they're having the issues popping up. But at the time, they were just starting this process, and they were announcing that the following Monday they were going to announce the results of their trial that they were working on with Oxford University in England, and saying, okay, well, we've got the CCI really surging here. We've just started to break out through this whole range. You can see the top of that range is what's called the percent R range. These are my big trends bands here. And you can see that we're just getting going through that there as of July the 15th. So at that point, the stock's trading about $58, and I'm buying an August 65 call. Notice the expiration month. Usually about 1 month out from till the expiration. So we don't want to ride these options out to expiration. We'll talk more about time erosion and how we manage that. But we said, look, we get into that trade there, it starts going in our favor, then it pauses, then it starts to surge into a Friday, and we're taking 100 and 200% right before the close. And then when they announced their trial results that next Monday morning, it gapped open to the upside. We got 357% better than our 300% target on the rest. And we said, take the money and run. You can see what happens. It then comes shooting back down. So my experience is that by the time it gets to a 300% target, a lot of times it's pretty stretched and maybe due for a consolidation. Sometimes they'll keep going. And it's always nice to get notes from subscribers like Tim Q. Great AZN trade last Friday as we were cashing in the rest of it that next Monday. Definitely love happy subscribers. That's why Big Trends has been in business 21 years and looking to go many, many decades and lifetimes longer to keep serving people. And the point being is that I believe it goes back to having a philosophy that trades only when you should be trading, not trying to trade all the time. I think the mistake that a lot of investors that turn traders make is you think, I got to be in the game every day. I got to do something every day. Like if you go to school, you got to go to school every day. You go to a job, you got to go to your job every day. Well, you should be studying the markets every day, but that doesn't mean you have to take a trade every day if the conditions are not right. So there's a lot of time here where we'll see on this chart, on the left side of this chart, it's kind of Deadsville. It's not doing enough to justify buying an option. But as Baidu in this case starts to break out outside of those big trends bands, this would be what most people call the traditional overbought period here that a lot of people go, uh-oh, that's bad news. Is that bad news for Baidu as it goes vertical to the upside? Absolutely not. It's hugely bullish. And the institutions are starting to buy, and they can't buy all at once. And so when you see the institutions start building their positions, you say, okay, this is where we need to get a piece of it too and ride with those whales as they keep on building up more and more into Baidu. So we bought the out of the money calls, got 100, 200, 300% in 4 days. Now, these bands are based on the big trends bands, I call them, are based on Larry Williams percent R, percent range indicator, which basically says where is the stock in a 0 to 100% level within its recent look back period range. And the point being that it's at the top of its range, but it keeps on making higher and higher highs. Remember what I said about that before? That's called an uptrend, a big U for up. Okay, up is good. We want more up when we're buying calls. We want more down when we're buying puts. If it's flat, we don't want any of it. We want to stay away. So we want to find those top 20% opportunities that stay in the top 20% of their percent R readings. That's like the 80-20 rule. The top 20% drive 80% or more of your profits in any venture, whether it's trading, business, top 20% of your customers drive 80% of your business. Top 20% of the things you do in life are going to drive 80% of your results. And it's the same philosophy on the upside and the downside. So when you add all the pieces together, you can see here's the percent R going overbought and then confirming right after that. Here's the CCI the next day going overbought, confirming the next day after that. So both of those are confirmed, and here ADX is crossing up even before those other indicators. This is the 3 legs of the stool that give us all of those pieces coming together. So here's another Baidu example. Baidu had earnings right here. We're in earnings season. Earnings here, but it wasn't quite right yet. So we don't take trades right in front of earnings for this service. We wait and say, okay, now ADX is crossing here. Now percent R is crossing. Everything's starting to go. CCI is coming on board, and we're coming out of what we call a triangle pattern. I'm sure you've heard that term if you've followed technical trading, and say, okay, it's just starting to break out of that triangle pattern as it crosses right through that descending triangle line right here. We're saying this is a time to get on board, and we managed to catch it 100 and 200% on the first 4 days, and then we got that 300% target there. You can see on that 6th day in the trade. But the other thing I want to point out is that when you go ahead and book profits, and then you look back and you go, oh no, it's continuing to go up. Should I have stayed with this? Should I get back in? No, it's nowhere near the right setup anymore. The ADX is too high on this particular method. Everything is stretched, and so you say no, you stay away, and then you miss this huge waterfall decline here. With it really is what would not only take back your trading profits, but turn a gainer into a loser if you're not careful, if you're not following the rules. So we're very explicit about telling you when to get in, when to get out. My trading, even over 30 years of option trading, has evolved. When I launched Big Trends, I was dealing with, okay, I've got to make sure that I'm relatively conservative with this money that I'm going to use to start this business. So in the late 90s, as I'm running up my capital in that wonderful bull run that we had there, and saying, you know what, I want to focus on higher delta options back then. So I was buying the tech and internet names, so I was buying them pretty conservatively within the money options with a higher delta, it's called. That means you get a quicker bang for your buck. But what I've learned since is that you actually, to get the most bang for your buck buying options, you want high gamma even more than you want high delta. You want to pick up delta faster. That's what gamma means, is that if I go from 30 to a 40 delta on a 1 point move in that underlying stock, that's like a gamma of 10. If I have a more high delta option, then I might only pick up maybe a couple of delta points on that next point move. So I'm going to get a lot more bang for my buck, and so are you, about buying an option that's a little bit out of the money, going to at the money, and then in the money. And really making sure that you can really leverage your gamma effect when you buy these and catch not just a 1 point move. We're not scalping these. We're in these for multi-point moves, and oftentimes 10% or more moves in the underlying stock that can make us doubles, triples, and quadruples. The thing we've got to be careful about is we've got to be careful about theta. That's the time risk. So we are dealing with that. We don't worry about Vega so much because that's the volatility risk. That would be an issue if you're getting in right in front of an earnings report. One more example, then we'll talk about time risk and how we manage that here in the Grand Slam option strategy. And here's an example of Morgan Stanley. Now, Morgan Stanley is not a name you would think would be your typical Grand Slam, big tech, big health, big biotech play, right? But the point being is that, you know what, Morgan Stanley gave me that breakout on CCI, the breakout on percent R, and then it confirmed. That setup point there was confirmed that next day. And so I was in there buying right here this next morning, and I'm wrong right away. Now, this happens sometimes, and this is why I want to say that our time rule is so important. And our time rule is we want to give the trade 5 trading days. These are all daily charts I'm showing you, so you don't have to be overreactive to intraday activity and possibly getting too many whipsaws. But the point being that in the first day in that trade, I'm wrong, and I'm wrong pretty significantly here. Second day in the trade, this trade is actually down on me by more than half. You say more than half, I can't handle that one. You probably shouldn't be buying aggressive options that can make you up to quadruple. You've got to be willing to take some risk. But the point being that when I count out 3, 4, and then on the 5th day here, we're right back to where we started on the entry. So if it was against us on the 5th day or after, we would get out of the trade. But you can see 5th day we're flat, so we're staying with it. 6th day, we're now positive. 7th day, we cashed in and rested, okay, right on that gap up. That's when that 7th day open is where we got the combined 220% gain all that 7th morning. So the beauty of that was that if you had taken the 50% stop out, you lose 50%, and then you could have made 220%. That's a 270 percentage point swing in your favor or not in your favor if you use a stop out improperly. With these aggressive options, you need to give them a little time to see if you're right or wrong. So 5 days is our time rule to say, okay, if we're wrong after 5 days, get out or more. Now, speaking of time and the time curve, this is the classic time decay curve. You see 0 days would be the expiration here on the bottom right of the chart. And you see in the last 30 days of that option's life, you can see you're losing about 2/3 of the total value that you would have over a total of 120 days. So the last 25%, you lose 2/3 of your premium. That would sound like you don't want to trade those. My experience is somewhere in this about 30 to 40 day window is kind of a sweet spot. In fact, I just recommended an option this morning that's a December expiration. So that takes us out to about, in this case, about 5.5 weeks before the expiration. So somewhere in this range, you can give yourself 5 days and take a small sliver of time risk for the much greater price action opportunity. If you catch these trades right, you'll know quickly in 5 days if you're right or wrong. And oftentimes you see a lot of the gains have been made in 5 days or less. This one took 7 days. It was Zoom. But in 5 days, you knew you were on the right track. Now, Zoom, this was a different kind of trade. This is what I call a retest trade. Here's a CCI retest. This yellow line coming back under the key threshold meant that that low has to hold. And notice, gets tested over the next couple of days. It's also scraping my lower big trends band. That's another support line. And I'm saying, okay, I want to get in here. And I had subscribers immediately when I bought this option. They're going, are you crazy? Stock's trading at 115. You're buying a 200 strike call out of about a month and about 5 weeks away. You're buying a 200 strike call and you're having to pay a whole $100 per contract to go way out of the money on Zoom. As we all know, Zoom is way, way past these thresholds now. This stock has been obviously one of the pandemic leaders. And the point I was making is that, look, on this, it was getting knocked on some bad news about security risks. And like Microsoft and Google were pulling out from using it. Guess what? They had competing products. That's not a surprise. But the point being that, remember, we got into this trade right here, and you start counting out a day later, 2 days later, 3 days later, 4 days later, and the fifth and 6 days, we're basically booking our profits here and saying, okay, we're right back into our band's resistance now. And we made 100 and 200, 101 and 200%. And then that next day, it was starting to roll over a little bit intraday, and I said, okay, I don't like that I'm not continuing on up. I'm going to take my 117% in the final quarter and say, thank you very much, Mr. Market and Mr. Zoom. We've booked those gains. You can see it backs off, and it goes up, and it backs off. That sweet spot, that speed of movement phase is right through here. That's what you want to catch as an options buyer, is the speed of movement. And another way to see this is to not just look at the stock chart. I do something different that nobody else in options really does, and that's saying I also look at an options chart. Why would you care about looking at an options chart? Because an option is a different vehicle than a stock. If you buy Apple stock, it's going to last you for lifetimes probably. It's not going to hit an expiration, but if you buy a 1 month Apple call or put, it's got 30 days to prove you right or wrong, and then it's gone. Time limited asset. So time is important, and that's what the option chart shows. Volatility is important too. If it's priced for a big volatility right in front of earnings, that makes that options chart look very different than the stock chart. So we've got to manage this decay risk. We want to limit our decay risk and say, let's look at that option chart. Here's an example of Microsoft. This is from a prior earnings period where Microsoft was basically rallying, and we were picking it up on all of our percent R, CCI, ADX came on soon after, and we said, okay, now it's confirmed we want to get in right here. We got into that thing at about 77 bucks, and we're buying an 80 strike call. We paid 55 cents at the time, 55 bucks a contract to control that over that next potentially up to month. Now, it turned out we got our double on that one after about 6 trading days. We said, okay, look, everything's still all systems go. It's above our big trends band here. It's just pausing. About an earnings are coming in about a week, and it's pausing. I'm saying, everything's still looking good. The ADX in green is still trending up. The CCI is still very overbought. We said we want to ride this. It's about 79 bucks. We want to hold this 80 call into earnings. The next day on earnings, it gapped up. As you know, Microsoft just had earnings yesterday, reaction to the prior night's earnings, and they were great earnings, but they actually dropped on the news, and then the market dropped as well. So the point being that you've got to make sure the patterns are right. Microsoft was not right in this latest period to do this. But we made 756% in the second half of the trade, and the whole trade averaged about 428%. So you're saying, okay, that's a lot of fun when that happens, but it doesn't happen a lot. But that's the only time I'll hold these into earnings, is if I've gotten all my risk capital out of the trade. Okay, so you can see here's an options chart of that November 80 call at the time. You can see all the same things I'm teaching about. The percent R is breaking out, and then it's retesting. It's holding that retest at about $1 right before the earnings. CCI is already broken out here and staying overbought. The ADX on the options chart still going up in green. I love it when that happens, and said thank you very much. The prior day it had closed about $1.20. It opened at 471. We cashed it out and said thank you. We'll take the money and run. The type of stocks we like to trade for a Grand Slam include a lot of the big names that you're familiar with: big tech, Baba, Baidu, Broadcom, Microsoft, Apple, of course, the FANG stocks. We watch all those. Some of the ones that people don't think about as much are like some of the credit card companies, Visa, MasterCard, and now we've got Square and PayPal in that mix as well, NVIDIA. And then, of course, like casinos. Been a rough year for the casinos with the pandemic, but they're still great trading stocks. We mentioned gold stocks and like names like Schlumberger in the oil sector. How about Mylan Labs, a generic drug maker? A lot of times you look at these charts and you say, whoa, it's just going nowhere for months. And that's when you get a breakout, the breakout could be even bigger. The longer the base, the bigger the breakout, as they say. This is a thinkorswim chart. You can see everything's all lined up here to say, get on board this thing. And this was slow and steady wins the race. It took 13 days. That's why you want to give it typically about a month. We bought out to the January expiration there in the second week of December and cashed it in for 100, 200, 300% off of a 62-cent option, 62 bucks per contract going to about $2.50. So it's all about finding these what I call outliers, term from Malcolm Gladwell in his book Outliers, great book. Bottom line is that, it's all about finding these unusual, unexpected moves. With the focus gamma booster strategy, lets us get maximum bang for our buck. Another long sideways period on Schlumberger. Watched it, basically monitoring the trade, and then right as we kicked off the new year here on this one, we said there's our breakout. Everything's all systems go on all the CCI on the bottom panel. ADX is already trending up. Percent R is already good. We're buying it that next morning. Got 100, 200, and then 300% in 5 days. I didn't update this graphic, but it did on the fifth day get our 300% target. They don't have to get them within 5 days, but you want to see you're off to that kind of verticality of straight up outside of those bands kind of moves. It's always great when new subscribers send me an email like, great start. Srikanth said, the first time after trying many services to start a service with a nice winner. So bottom line is that it's always a goal of ours to get you off to a good start as well. We can't guarantee that, but we're always working hard on every trade we do. Again, you've probably heard of things like cup and handle patterns from Investors Business Daily. You get this sideways cup, you get the handle starting to form here, and then this thing's ready to roll to the upside. Again, 5 days later, the fifth day, we're profitable. We had to grind through a couple of sideways days in that handle, as you see the handle forming there in retrospect. We're saying, look, we don't want to miss it, and then we get it launched. And even intraday, you can see these same patterns I'm teaching about. If you wanted to use a 30-minute chart here, you can see several windows where you're getting nice little breakouts here. The third of those was really powerful, and that was on the seventh day. We got all three of our targets on that seventh day, and it turned out that they announced that a big investor was wanting board seats and was going to shake up the company, and guess what? That ended up being a short-term top that next morning, and it shot back down. We're already cashed out. Do you think anybody knew through this rally that maybe it was going to get that news? Of course. We don't know that. We're reading the charts to tell the tale and take advantage of that. You can trade the downside the same way, and sometimes you have to take a little bit of a leap of faith and say, look, we're buying with BABA at 160. We're buying a 140 strike put, 20 points below the current price. That seems very expensive to pay 97 cents or 97 bucks a contract, controlling 100 shares. And the next day it pops down 5 points, and we're getting a double on our money, about a 20-to-1 leverage. So we're good. We got a free trade. But then when it reverses right here, we say we cannot afford to hang around. We went from about 150% gain and said, you know what, we've given back too much of our profit. We will give you some trailing stop guidance explicitly on trades that we call out if it's giving back too much of its profit. Same thing happened with U.S. Steel, actually. U.S. Steel, there's our breakdown level. All three of the indicators are signaling right here on this low. But remember, it's got to confirm. So it's got to close below that. 2 days later, it did. So we're getting a bear signal right in here and saying, okay, we get a double after just the next 3 days into the trade. It's up to about 150% gain as it starts to break down right in here, but then it reverses from 150 and starts giving back too much of our profit. Took the second half out of the 66% gain. Thanks very much. I love it when I get emails from subscribers saying, they were having a hard time with their trades, and then when they started using our methods like percent R's, the big trends way, they had a lot of success. Robert Ramin said his total portfolio almost tripled, my highlighting there. But he had a lot of big gains and relatively few losers. And guess what? He now uses it as his primary trigger for all of his trades. No surprise, right? That's what you're going to find when you can find successful methodologies. Like I've been through many hundreds, if not thousands, of possible methods that sounded good on the surface that I thought or other subscribers thought could work. We put them through rigorous testing over decades of data and find just the best of the best that we share with you here. Another example coming off the pandemic low, GM. I thought GM, was kind of a classic bear retest trade here. It's coming up into this retest zone right here, and you can see the CCI is right near its retest, right off of that entry that we got, that blue line there, saying, look, GM looks kind of like a dead cat bounce to me. It should hold that resistance. But it was too slow. I was right, when they were switching from selling cars to selling ventilators there. It's like, boy, it's a sign of business is really bad there in the pandemic lows. But saying, okay, guess what? We made 50% of the trade after 5 days, but I said I didn't like how slow it was happening. I thought we would have come back down and been within 5 days around these lows. When something doesn't meet your expectations as a trade, folks, sometimes it's better to just take the money and run. And so that's an example I want to share with you, is that especially on put options, especially when we've had this bullish run, that was kind of a tell that even GM wasn't going down as much as I thought. Now GM's been coming up on the electric car hopes. But you know what? It's been a perpetual laggard, so something you have to be careful about buying into that. We want to get into true growth situations, not just sort of short-term turnaround situations. So there's got to be a catalyst, and usually it's that technical driver. Usually we've gotten some good earnings behind it, or bad earnings as the case may be, and we're getting that confirmation, not just the initial breakout that could be a fake out, but we're getting the institutional continued buying or selling that tells us it should be a great looking uh, report. Now, and Mark, thanks for your email to sign up. We'll definitely follow up with you on that. But basically, when we look at this and say, how do we, buy these? You're going to have to buy an out of the money option. So you have to get over the fact that, okay, it's intrinsically it's not worth anything at first, but that's where you can buy these options cheaply. And then you need the fairly quick proof that you're on the right track and you're getting that bang for your buck where you can hit the home run trades. If we're wrong, keep that time stop at 5 trading days. If the stock's not working, get out. And then book those windfalls gradually. Get the double, sell half. Get a 200%, sell half of your remaining half, or a quarter of your original, and then the final quarter of your original on the last target. The other big thing is, this is an important one. Do not overcommit your capital on any trade. I've seen so many traders, and even a lot of smart hedge fund types on Wall Street, who they get greedy and they think they know it all, and then they overcommit their capital, and then they get blasted. Okay, so just take a small bit of the money you put aside to trade the service for each new trade. That'll keep you balanced and not getting too high or too low. And then I give you weekly video training. Once you sign up, you get all the settings. You get a rule sheet with exactly the settings you should follow along at home. And remember, if you came in late, if you took a $10,000 portfolio from the beginning of 17 with this method, it'd be up to 33,500 before commissions, and as I said, commissions are down to next to nothing for option trades. More importantly, of course, past performance doesn't guarantee future results, but I believe that we're always getting better along the way, so I have a lot of confidence that we can do great things for you. The other thing I want to show you is that, okay, usually my subscribers would pay me thousands for this service. I've had subscribers pay me multiple thousands for this, and very happily so, because they like the gains they continue to get on the service year after year. But the point being that I want you to try it out as a special for the good folks at Investors Expo. I want to say, look, usually my lowest monthly rate I'll go for my Big Trends loyal subscribers is $147 a month. But what I want to do is give you this chance to try the first 30 days for just $47. Now, people ask me all the time, why don't you do free trials? Free trials are worth what you pay for them, which is nothing if you get free trials. I'll assure you that you probably commit little to no time on the free trials you get. But if you spend a few dollars for something, all of a sudden you've got a little bit of skin in the game. So what I found is that $47 is enough to ferret out who's serious about taking advantage of big opportunities and starting to commit yourself for the next 30 days to following this. I'm not saying you have to trade it from the first trade. I did just make a trade just over an hour ago. You can get it when you get signed up here at members.bigtrends.com/slam. I'm going to pop that in your chat box while I'm talking about, and I already have. Thank you, Anna. But basically, members, it's not a www page, it's a members.bigtrends.com/slam. When you sign up, you become a member, and that gives you access to not just the trade alerts, it will call it when to get in, and more importantly, always when to get out. We never leave you hanging. You get about 8 trades per month on average, sometimes more, sometimes less. But over the course of a year, we expect to do about 100 trades. But the bigger point is that for 30 days access, you'll learn with the fact sheet you'll get weekly video training. You'll also get, anytime you got questions, live support. We've got people that are standing by all the time to help answer questions through email and through the phone. But we don't give individualized trade recommendations. We trade them for everybody the same way. So if we made a recommendation on XYZ, you can say, okay, what are you doing with XYZ? Well, our recommendation to subscribers is X or Y or Z. But the point being that, what we're looking at here is that we'll tell you when to get in, when to hold, when to get out. And we'll give you very explicit email and text alerts of instructions. So what I want to do is when you go to that page, show you that page real quick. It's incredibly simple. The KISS principle for me, folks, in trading and in everything I've done in business since I launched Big Trends back in 1999, it's about keeping it simple for everybody, including myself and my staff. So keep it simple staff, I could say, in addition to keep it simple students. But the point being that, you know what, for 47 bucks, we've already taken the coupon 100 bucks off for your first 30 days. If you don't like it, I'm going to show you here how to no longer have it. But I'm confident you're going to like it. And when you continue after 30 days, it will rebill every 30 days for 147 bucks after the first 30 days, and for each 30 days thereafter. So if you don't like that, or it's not for you, all you do is after you review what you got to put in the checkout button here, you get all your information in here. And bottom line is that we take all your major credit cards and say, okay, look, you can say you saw with me here on this event with Investors Expos. But point being that, okay, I'm going to show you down below. We'll give you several ways to do this. Once you review the terms and conditions, they're spelled out here on this first line of this green text. Review all that and know that it's an automated renewal program. I'm not pulling any punches. I'm saving you extra money to try it for 47 bucks for the next 30 days. That's like $1.50 a day, less than half of a cup of coffee these days, right? But the point being that, if that's not for you, we give you multiple ways you can notify us through email, through fax, through we got to have something right. It can't just be a phone call. You've got a clearer cancel policy of what you need to do if you need to get out. I'm confident you're going to want to stay with it. I'm committed to it. I've got a team of research analysts and members here at Big Trends that help me to see new opportunities, help me see when to get in, when to get out. So I'm really committed to making sure you're going to get great value. The other point I want to show you is in the customer note field, if you like this idea of text alerts, I have to have you actually tell me that you want the text alert sent to your whatever number it is. So you type in text alerts if you want to get that. You should have unlimited texting capability on your cell phone. And then basically also ask you to tell me if it's what provider, AT&T, Verizon. The only reason we do this is so that we can put them on different batch lists. So we found that if ever something got hung up in one, we wouldn't want to hang everybody up. So basically we say, okay, whatever provider you're using, type it in there, and you'll get the text alerts. No additional charge from us. Just make sure you've got unlimited text capability on your smartphone plan. So that way, anytime there's an entry or an exit, you can say, boom, time to get in. Boom, time to get out. The instructions are sent to you via both email and text that way to your smartphone. So beauty of this is that it really is something you can take great advantage of. You go to members.bigtrends.com/slam, and you're going to get those real-time trailers. And by the way, when you get signed up, you should get my brand new trade. If you have any questions on that, at the very bottom of that page, you'll see you've got our toll-free number there. It's an easy one to remember, 800 Big Trends. Here at bigtrends.com. 800 Big Trends gets you to us toll free, or email us anytime through clientcare@bigtrends.com if you have questions. We're here to help and serve you. The point being out of all this is that, you know what? You know that there's a lot of volatility in today's markets. There's a lot of fear that a lot of traders have out there about another crash. I welcome the opportunity for big trends up and big trends down. Some of the fastest money I've ever made is on the downside, like in 2008, I was on Fox News and I said, watch out below September of 08. And we caught that huge run on the downside as the institutions bailed on the market. They're going to have phases like yesterday's big down move where they're bailing, and you have an obligation to be prepared to take advantage of the downside, but don't get so bearish or worried that you also miss out on huge upside. There's been a lot of fear out there, and it's been a tremendous upside year. Most of our money has been made in calls. Our job is to ride the trends that are in front of us, and that's your job as a trader too. The biggest mistake you can make is to do nothing. So go to that link, take advantage of that for 47 bucks, because if you do nothing, I can assure you one thing, you're going to keep getting the results you've been getting. If you're happy with that, fine. But if you want to step it up to the next level, I really am confident that Grand Slam Options gives you a way to turbocharge the growth part of your portfolio. Thank you so much.
My name is Marina, the Trader Chick, and thank you everybody so much for being here on this beautiful Thursday. I don't know where you guys are located, but it's been beautiful here in Guatemala. I just wanted to let you guys know that even though we are all here to learn something and to hear me present, my actual goal is to really be able to help you guys as I go along with my presentation. So I really, really, really welcome all of your questions. And actually, the more questions you ask, the more that we can interact. And that's actually how you'll learn, rather than just hear what I have to say, so that it really makes sense to you, so you really, really connect with what you are interested in. Okay, so please ask me questions. The more interactive we get, the more fun we will have, and the more you guys will get out of this, to be honest with you. All right, so today's presentation. Oh, there we go. Hi, Jack from England. Has the trader experience taken a penny sent door to door and found the neighbor will trade the 1 point something worse? Not really understanding that, but sounds interesting. Okay, so what my presentation today is why scalping the futures E-minis is less stressful and much more profitable. So I personally trade the E-minis futures. I don't know if any of you guys have ever heard of that. It's fine if you haven't. It's literally just the S&P 500 on the futures market. But basically what I want to talk about today is something that can be applied to any market period, and also bring up the scalping strategy. I don't know if any of you guys scalp, so I will get a little bit more into what scalping is because it's really changed my life. So I want to do a quick intro. This is me, Marina, the trader chick, and that's one of my little people that is one of my sons. And like I said, I have a confession to make. I am a scalper. I know that many people don't fully understand what scalping is. And to be honest with you, until I was told that I am a scalper, I didn't even know I was. So kind of how I stumbled upon scalping was kind of the way you know, pretty much any massive revelation or massive good thing that happens in our lives, unfortunately, happens through some sort of a huge lesson. In our cases, usually our lessons, especially for day traders, comes through losses. And in my case, it was pretty significant loss. I lost almost $4,000 in the matter of 4 and 5 minutes. I was chasing a trade, which I'm sure the majority of you guys know exactly what I mean by chasing trades. I saw the trade going. I was in a trade room. I was told that somebody mentioned that there's a good trade. I didn't really understand. I chased it. Of course, it went the wrong way. I did not permit myself to believe that it was going the wrong way. I moved my mental stop and literally blew my account. However, it wasn't my first time. And in those 2 months, I managed to blow up 3 other accounts. This was over 6 years ago when I first began trading. And the problem is, and I know that you've all been here, is that I didn't end up stopping. What I ended up doing was I ended up revenge trading for another 2 days and losing almost another $2,000. So that was literally when I had my total breakdown. And to the point where I am not even kidding you, I was laying flat face on my floor in my bedroom. That's where my office is. And my husband came in looking down at me and he was like, what is going on? He was telling me it was time to stop. Everybody else I knew was telling me it's time to stop. So when you have a breakdown, usually 2 things happen in your life, right? And I know we've all been through some sort of a breakdown, whatever it is. We normally have 2 decisions to make, right? One is you quit, you get out, you never do it again. In this case, never trade, or you have a breakthrough. And gratefully, in my case, I ended up having a breakthrough. So this is kind of cool. I don't know if any of you guys have ever watched Nacho Libre, but this is also relatable to a lot of you guys. I get these emails all the time, people saying that they've lost, but the thing is, we know that we can do this. There's a really awesome part in Nacho Libre when he's standing in front of a pew with a candle and he really wants to be a wrestler. And he's saying to the Lord, he's like, why did you make me have this passion and make me such a lousy wrestler? And then, of course, he goes on to win. Well, my breakthrough was the same because I knew that there was no way that I could quit. I knew deep down inside that I could do it. And I know that you guys feel the same way. One thing, though, that I recognized for the 2 years that I was really struggling, I spent over $20,000 in trainings and everything. When I finally came back to the markets and to the charts, I did bare naked charts. And what I recognize is that no one ever really taught me the basics. I did not even understand the absolute basics. Whenever I asked, can you please explain a divergence? Can you please explain a reversal pattern? I was always shunned down and be like, Zipto, I knew that information. So I ended up going back to my naked charts and just really studying the charts. And I did it for years. And I recognized one important thing. The language it speaks to us. It is fluent. It has a language, and I literally became fluent in it. And to this day, whenever I have people contact me and they don't even know what a support area is, a resistance area, a divergence, a reversal pattern, I tell them, you better stop right now. Do not go live in the market. It's literally like getting into a car and not knowing where your brakes, your accelerator is, and not putting on your seatbelt. And how many people do that? I can't even tell you. Unfortunately, too many. In the day trading world, and we all know this, there is no barrier to entry, right? Nobody's telling you if you know it or not, because on the contrary, the way the majority of the market movers and brokers make money is for you to not be fully educated, right? And that's something that I recognize. So what I'm going to be talking to you about is the basics and also what scalping is. Scalping. What I recognized after I went back and started to learn the basics, one other thing that I was really struggling with was huge targets. Why? Because it sounds romantic and beautiful on paper, for sure. However, can you think of going into a big target? What happens to you guys? One, you have to put in a pretty significant risk, because without a big risk, you can't really go for the big profit. If you're putting a 2-time risk for a 1.1 profit, you might as well just give up all your money. It's ridiculous, right? You want to be able to at least do 1-to-1 or 2-to-1, right? So scalping, the only thing I noticed is when I started to put in for smaller profits, I was getting filled much faster. And you know what happened then? My confidence was building. Scalping and confidence should be synonymous. Hitting smaller profits is really what it's going to give you that confidence. Think of anything you guys do in your lives. Whenever you are doing something and achieving it, it doesn't matter what the actual big goal is. The first step, if you are achieving that first step instead of going backwards, what happens? Oh, wait, you feel I could do this. You're uplifted. You're feeling more secure, right? So this is exactly what scalping is all about. Now, I want to do a really quick intro of who I am, just so that you guys understand day trading is not only sitting in front of your computer and trading and charts and research. We're people. We have lives. That's what makes us awesome. And day trading actually should embellish it, rather become who you are. When I first began, after the 2 years and after I came back with renewed, vigor, I spent like almost 5 years in front of my charts for like 12 hours a day, literally the exact opposite of why I wanted to trade, which was only a couple of hours per day. Scalping now permits that to happen. Now, I am Marina, the trader chick. I live in Guatemala. I am an expat in Guatemala. I've been here for almost 11 years. I am trilingual. I was a Soviet Union refugee, and I arrived to the US when over 40 years ago. So I speak Russian fluently. It's my mother tongue. However, English is my main tongue. But I've been living in Central America. We lived in Costa Rica before for almost 20 years. So I'm trilingual. I learned Spanish in my later years. Why is this important? Because one thing I noticed with the markets is that it literally has a language. If any of you don't feel like you are communicating with the market or really listening to it, that's because you have to start to look at it as it is a language. It's a language. If I get into a car, if you know what, any profession you guys are doing right now, there is a certain language. If I enter into your world right now, I'm not going to be able to understand it until I learn that language and that lingo. And many people don't realize the market is exactly like that. And I think the reason I realized that is because I am trilingual, and it's really been a huge benefit for me. Before I became a day trader, I was a fitness instructor and a travel writer. Why is that important? Because anyone can do this. I cannot tell you the amount of people who write me saying, oh, but I don't have a math background. I don't have a finance background. Who cares? You don't need it. You don't need it. You guys could do this. You can do this, and that's the benefit of trading. So this is my travel site. I still run it because travel has been a huge part of our lives. This is still up and running. This was before I became a trader. So I trade the E-minis. Just a quick reason why. I know that a lot of people don't really understand what the E-minis are. Like I said, they are the S&P 500 index on the futures market. The cool thing about trading with them is that you don't need to start with $25,000 as you would with equities. You could literally start with $500 to $1,000. And that was a huge thing for me. Another thing is you don't need to do any research. There is absolutely no research to be done unless there's a news item and you just stay out, because it's all 100% technical analysis. Okay, now the average stock trader usually has 3 to 5 different charts because they have to watch all those different positions. With the E-minis, I personally use one chart, 2 indicators. It's simple. And again, with a stock trader and Forex, all those others, you have to put in hours and hours of research and analyzing. And even then, you could come into the market and everything you've researched can just go, to the wayside, because all of a sudden the market is going to do what the market is going to do. But when you're watching it through a technical analysis, you can actually understand what it's going to do. So now we're going to get into the basics of day trading, the language, because if you guys don't know that, you could just stop right now. I'm going to be really, really honest with you. Stop donating your money to the markets if you don't even know what a support area is, a resistance area. And I mean to actually not only hear the words, but know and show on your charts that it's there. Otherwise, you might as well just give money to, a charity that really needs it. So before we get into anything, I have made a document, a presentation for you guys that is going to follow along specifically with everything I am about to show you. I literally use this as a cheat sheet whenever I sit down and trade. Okay. So please download it. It's completely free. Makingofadaytrader.com. Completely free. Everything that I'm about to go over now is going to be in this particular free document. You can download it and go along with the presentation. So as I mentioned before, I use one chart. This is my chart. I use 2 indicators, and this is it. I can take this anywhere in the world, and that's the beauty of trading. I don't have to lug around with me 3 to 4 or 5 different monitors, which when I began, I had 3. It was horrible. I was literally shackled to my desk. It was terrible. Now, one chart, this is it. I realized this after years of coming back and just back testing all of my trades and everything. So I use EMA lines and the MACDs. All right, so let's begin. We all understand and we all know that there is 3 trends, right? We get that. We know it. It's logistic. We know that there's an upward trend, a downward trend, and a sideways trend. However, what we don't realize is, and you could go back and if you're back testing correctly, you'll notice that the majority of your losses happen in sideways trends. Why? Because this is the indecision area. This is the consolidation area. This is the sideways movement. This is when there is just too much of a not knowing, right? So we as individual traders, retail traders, we never want to be in an area that we are not 100% sure what it's going to do. Obviously with trading, you can never be 100%, but you can certainly be 90 versus 40%, right? So again, trending markets, very basic, understand. Downward, sideways, upward. What is an upward trend? The basics, each pivot is higher than the other pivot, right? It just keeps them going up. If you don't know what a pivot is, once again, stop, because I actually get a lot of people asking me what are pivots. Pivots is literally where it runs and retraces. It's right here, okay? So each pivot is higher than the other. We call these upward trends bull markets, markets trending up, markets going up, whatever you want to call it. It's all semantics. The bottom line is a trending market. When you go long, when you are looking to enter at a smaller price range to get out at a higher price range, right? And you take the profit. Downward trend, the exact opposite. And as the guy before me mentioned, we make more money going down, sometimes shorting the market as up. So especially for day trading, that's super important, right? Downward trend. Each pivot is lower than the other pivot. We are shorting the market when we're going short, okay? The bear market, market trending down, going down, whatever you want to call it. When you short the market, what does that mean? You enter at a higher price range and you get out at a lower price range and you take the profit in between. Okay, so let's talk about these sideways markets, because these sideways markets, consolidation areas, transition areas, I literally call them the trader's worst enemy, and that's exactly what they are. So right now, I can guarantee, I could stake all of my money is that the majority of your losses happen in these sideways movements. I can guarantee, and they're called indecision areas, exhaustion patterns, the chop, whatever you want to call it. The bottom line is you have to know when to spot it and stay out. Because in trading, there are 3 important positions. 1, knowing when to get in. 2, knowing when to get out. 3, knowing when to stay out. And a lot of people don't realize the importance of knowing when to stay out, because especially newer traders think that we have to be in the market all the time. To be honest with you, the most action you could possibly take is knowing when to stay out and actually having the discipline and understanding of staying out and keeping yourselves on the sideline until you have confirmation. So why is this area so dangerous? Here's the thing, guys, and we all know this and we will all accept this. Day trading is mental. It is such an emotional, mental activity, right? It's literally like 85 to 90% mental and 10% skill. I always say that I could teach anyone to trade, but what your mind is going to do, that is completely up to you, and that is, you have to really work on that. Now, what happens with traders is that we come up with stories, many bullshit stories. Okay, so I don't know if you guys understand the concept of story that goes on your head, but here's a good example. You just talk to one of your friends and they said to you, I'm going to call you back in an hour, but you left it a little bit, you know, it was not a really great conversation. And all of a sudden your friend is not calling you. So what happens now? You start to invent stories in your head. Oh my God, they don't like me. What did I say? I must have said something wrong. I'm never going to talk to my friend again. Oh my God, right? Those are stories. And what happens? The next day your friend calls, oh my God, I'm so sorry. My phone fell into the toilet and it got all wet. So all your stories were nonsense, right? Because 99% of the stories we come up with in our heads, they're not real. They're just made up stories. However, with trading, when your money is on the line, guess what happens? We come up with 1,000 stories. When the reality is, we just have to sit and read what the market is telling us, the language. Here is the story that goes on when we start to spot these areas. Now, there are 2 types of traders. One is the trend is your friend kind of a trader. So when your trend is your friend trader is looking at an upward market, and all of a sudden they're starting to see this consolidation, the slowdown, what goes on in their heads? The story they are telling themselves is, you know what? The market's been going up all day and I'm going in for a long because it's going to continue. Number 2 type of trader is the contrarian trader, and that's what I was. It's when you're seeing a strong move in one direction, and what happens in these areas, you know what? The market's been going up, in this case up, all day. It's got to correct. It cannot continue going up, so I'm going for a short. So here's the deal, guys. Both of those stories are total nonsense. They are non-existent because the market is going to do what the market is going to do. And when you start to realize you could never predict or beat the market, guess what? It becomes your friend, right? So what do you do here when you start to see us? You stay out. You stay out of these areas. Have that strength and respect the money in your pocket to know you need to stay out, okay? That is what's going on here. So there is no more story. The only story here is that the market is telling you, chill out, I'm having a slowdown, I'm indecision, I'm gonna figure it out, and once I figure it out, I will let you know, okay? So how do we even start to spot these areas? How do we know that these are happening? Okay? How do we know that these are happening? We start to recognize them through areas. Okay, the market respects areas. It respects areas, and guess what? We, as the traders, come to work every day looking at the charts, have to respect them just the same. What are those areas? They're the support and resistance. Okay, and like I mentioned before, support and resistance areas are literally like the seatbelts in your car. They will protect you. But if you don't know how to recognize them, if you don't know what they are, how are you going to be able to protect yourself, right? So what are support and resistance areas? This is what they look like. Okay, it's where the market bounces in between or hits. So what is a resistance area? What's a resistance area, guys? It's the ceiling of a market, and it's not only 1 hit or 2 hits. It's got to hit it at least 3 or 4 times for it to be significant. This is a resistance area. It's the ceiling of the market. Now, as I mentioned earlier, I scalp, so my scalping sessions are only between 1 to 1.5 hours because I cannot do any more. It really drains your energy. So this is about a session. Now, what I said, the market respects areas and it revisits those areas. Okay, so when I have a significant resistance area, I draw it out because guess what? When it revisits it, I'm not surprised by it. Oh, you know what? It's been an area that has been respected. I see here, I'm getting out if I'm in a trade or staying out if I haven't gotten in yet. This is what they are. And if you don't draw them in, you'll not only be unprotected, but two, you'll miss out on one of the best trades, and that's the breakout trade. Okay, these are resistance areas. What's a support area? It's the floor. It's the floor of the market. It's where it hits it several times going down. Again, it could change the trend, or it could just halt it for a bit and then have a breakout. We can't decide that until the market is going to tell us what it's going to do. This is a support area. Okay, so we have channels where you have in between the resistance and support areas. Again, super important areas. Those are the chops. Those are the consolidation areas, right? That's what we have to understand. Yeah, Donna, here, it's making of a daytrader.com. So all of this that I am showing you guys, all of this is in that presentation, that the document that I have in makingofadaytrader.com. Okay, so how can we, now that we know that that is really where it's all about, how do we recognize it when it first begins? And that is also a language. It speaks to us, guys. It actually, the market is desperate to tell us what it's doing. It is so cool. It is literally desperate to tell us what it's doing. Okay, so reversal patterns. Do you guys know reversal patterns? They are my religion. I listen to reversal patterns and divergences like there's nothing else. What are reversal patterns? They're telltale signs. Reversal patterns, triple tops, triple bottoms, double tops, double bottoms, head and shoulders. Those are all reversal patterns. Now, when you couple it with divergence, that's it. And to be honest with you, when I see a reversal pattern, I already stay out. And when I see a divergence, I already stay out. But when I see them both together, that's like 90% indication that the market is going to change direction or totally slow down. You never want to be in a slowed down market. Why? Why would you want to do that, right? Would you want to bet on a horse that all of a sudden decides to go slow when it should be, what, I don't know, the terminology. You see, the language of horse racing, I don't know if it's trotting or running, I don't know any of those words, but would you ever be in a horse that decides to kind of slow down? No, absolutely not. What's a divergence? So if we're headed up, again, it could be the same if you're headed down, and your pivots, let's say, are going up, but your MACDs, and I use the MACDs because they are the least lagging indicator. You guys know that indicators lag, right? Like they don't tell you exactly what's going on. So one thing I recognize is that MACDs, they start to show you weakness in the market before it's actually shown. And you want to be on that edge, right? So that's why I love MACDs. So as you can see here, it's headed up, yet my MACDs are headed down. And look at that, it changed direction. Okay, now here's the double bottom, and look at my MACDs, massive divergence. Okay, so this is what divergence is coupled with reversal patterns. All right, so I'm now going to put it all together. But before I do, remember everything and a lot more. By the way, there's a lot more slides to really hone in on the reversals, the divergences in my document that I made for you guys. Makingofadaytrader.com. Okay, makingofadaytrader.com. Dimitri, what time frame are you using? So I use tick charts. Tick charts are the time frame. I don't use 1 minute or 5 minutes. Why? I don't know if any of you guys have ever heard of a tick chart. I'm going to actually show you in a little bit on my live chart exactly what they are, but they are transactions per bar. So they are volume indicator in the actual bar. So I personally like 610. That's my sweet spot. Okay, so let's put it all together. I mentioned before, if you don't have your support resistance areas drawn in, you are gonna miss out on a really awesome trade. Everybody's heard of the breakout trade, right? We've all heard of the breakout trade, right? But how can we spot it if we don't have our areas drawn in? So let me give you guys a layman's term layman's explanation of what breakout is. All right, so here we are. We're sitting in we just got a call from our good friend, and they're saying, hey, come over. So we hop in our car, and we have driven to our friend's house a gazillion times. We could probably do with our eyes closed. That's how confident we are, right? So we hop in our car, and we are raging to go. We hop on the highway that we've always been on, but all of a sudden, there's a huge construction sign. And there's the construction workers pointing you to go east, to go to the right with a huge detour. I don't know about you guys, but whenever I see that, guess what happens to me? I totally start to stress out. Why? Oh my God, what if the detour, they forget to put up the signs for the detour and I get lost? I've never been to this neighborhood before. I don't know where I'm going. Two, what if the detour takes me so far out of the way and I really don't know where I'm going and it's going to take me forever to get there? Three, what if they decide that the road is completely closed, we cannot go, and they just say, sorry, you're going to have to turn around, but there's no detour showing you how to get home. So I'm stressing out again, okay? Or they're just going to say, you know what, forget it, just get back, and you're not going anywhere. So what happens when I'm in this detour? I'm stressed, I'm uncertain, I'm in doubt. Guess what that is, guys? That is that consolidation area. That is that chop, that indecision area, that exhaustion pattern. Do you want to be trading in an area where you're going through that much stress and that much doubt? Tell me the truth. Do you? Because it's amazing to me the amount of people that actually keep on going into those areas. Just think of it like that. But now, all of a sudden, the construction guy brings us back to the highway we know. The detour was great and opens up the road, the highway, and they're like, okay, continue. Guess what? You guys are with renewed energy and you are raging now even more. That is the breakout. You went here, massive detour, and boom, the road is open and you are headed back. You are back on the road. You know exactly where you're going. You are full of energy. That is the breakout. But if you don't know when this indecision area is happening, you're going to be losing money in that area, right? Again, highway, you're going great. All of a sudden, massive detour, boom, they reopen the road and you are headed in the direction. So how do I take my breakout trades? And everything I do is from my indicators. I only use 2 indicators and my MACDs. So what are my indicators? Like I showed earlier, I use the EMA lines, which is the exponential moving average, not the moving average, and the MACDs. Why do I use these? Because when I came back and was just doing bare naked charts, one thing I recognize is you need a place to take your trades from. You cannot just enter on a strong bar. That is absolutely ludicrous because a strong bar could just come to an end and retrace and you're going to be out. So think of yourselves as archers. You guys know archers, you know, the bow and arrow people, right? Guess what? Do they ever just walk around aimlessly on a field? No, they have a place to stand from. And that is exactly what my EMA lines are. I see the breakout, the run, and I have my order waiting because you have to have an order waiting. You cannot go market order when you're day trading. When you're investing, it's a whole other thing because you're holding long. But here, we're going for short, quick profits. Why would I go in just like that? So I have my order waiting, so it picks and it gets me exactly where I want to enter, right? So here is where I enter, right here. It goes up. Look at this massive movement on the MACDs, no divergence, barely any retracement. It retraces here. I'm in the trade, boom. I'm only in for 1 box, and I got in within probably less than a minute. And then it continues. But the thing is with breakouts, they don't go long. So you have to know when they happen. The same thing, what I use is, as with a breakout, I also use as well with a trend change, because trend change, trades are just as powerful, right? Because you want to be in as early as possible when the trend finally changes. So here is a pretty significant resistance area. I have a mini support area, finally breaks through, totally goes down. This is my 0 line on my MACDs, barely retraces. I enter here and look at that run, right? So that's pretty much what I'm talking about. Now, I want to show you guys my chart and how I look at it in the live market, because it's one thing looking at its slides, but it's a whole other thing when you are applying everything. So the market today has been very volatile, and here are, let me just show you guys my chart, right? So as you can see here, I am on the ES Mini, which is right here, ES. I'm in the right contract because it does go by contracts. There's some in futures. And I use the 610 tick chart. So what is the ticks right here? Do you see my bars? You see here it says ticks remaining. It is, each bar has 610 transactions. This is so important, guys, because I know that a lot of people use volume as an indicator. The thing is, volume indicators are notoriously lagging, right? Because it's not in the moment. However, when you're looking at this bar and you're seeing the exact amount of transactions that are happening in real time, and by the way, tick charts they are universal. They are nothing special. Any good, strong charting platform, they have tick charts. Okay, this is not anything, oh, this is so weird, I never heard it. Trust me, they are there, and you can customize it to whatever you decide. Donna, I personally have been trading on the 610 for years. I tried the 1597 as well. It was a little bit too much, so I just love it. If you are getting good results with 978, awesome. It's all about back testing, right? Do you guys know what back testing is? Because if you're not back testing the trades that you think are good and then go in the live market thinking that they're good but don't have actual data, you're going to end up losing. So I back tested it for years. Okay, so that's the cool thing about tick charts, is that they are in the moment. So at the moment, I am seeing a pretty significant resistance area right here, right? However, what I do like to do is, hang on a second here, let me get my chart in order. You can see here, remember what I told you guys? The market revisits areas, and guess what? This was in the morning. This was pretty much around open for me because I am 2 hours behind you guys. Right here, this is it right here. And look at that. It revisited. It took about an hour and a half difference here, but it revisited this area. So when it revisited it, I'm already prepared, this resistance area. And I know, wait a second, it is a really strong area because it's been hitting it several times today. Guess what? I'm not touching it. Now, if you guys don't know that, if you haven't marked in your resistance area and decide to go in for a long and you get stopped out because it hit this area and retraced back on you, that's because you weren't prepared, right? So this is what I'm talking about, understanding what is happening here. And right now, I'm looking here. I've already recognized that this is a really significant area. I'm not going anywhere near these trades here because I know I'm going to be stopped out. It's uncertain. The next area that I have is around here. It's not a full-on area just yet, but it is an area I should definitely consider, right? The market is here. So I do have a pretty significant move here for a mini trend because I'm only going in for, smaller profits. And when it's all, on my end, showing me the strength that I need, I can enter and monetize on a shorter run, right? And that's how you have to prepare yourselves, right? You guys have to see here, look at this. We have a massive divergence going on right here, right? It's completely straight, yet here, you see it's straight, yet here, look at how down it goes. And look what happens here. It totally changed direction because I always look for everything either going up or down. And I want to make sure I'm on the right part of the market. So this is just, obviously, we don't have a lot of time for me to really show you. But if you guys don't understand, it doesn't matter if you're buying softwares. It doesn't matter if you're following other people and wanting to take their trades. But if you don't understand what you're doing, it's kind of like sitting in a car with the driving instructor pressing on the pedals for you, and the second they step out, you have no idea what you're doing, and that's when all your losses happen. Because if you don't know how to read it, why would you continue doing something that you are putting a lot of your money on the line for? You want to know what you're doing, right? And that's literally when all of your profits are going to start to come to you. Okay, so again, this is what it's all about. All right, being in the live market, I get to show you guys all of this. All right, so imagine now if we could do this together every week. And I'm so excited about this part of the presentation. Right here is what most traders can do to totally unlock what is holding them back. And do you know what that is? Do you guys know what that is? It's how do you know if you're doing it right? How do you know if you are doing it right? So let me break it down for you. I've made something really special for you guys, okay? When you get the cheat sheet, which I've been telling you about, that presentation, when you get the cheat sheet, you immediately get put on the exclusive VIP list. I want to encourage you guys to get this free cheat sheet at makingofadaytrader.com. This can truly be your turning point for you. Okay, so here's what I've got for you. So many of you guys, so there's a special invite that is going to be coming into your inbox, and it only is coming to the people who are on this presentation live. It is not going to go out to anybody else. This is only for the people during this presentation. So here's what I've got for you. So many people have been asking me during and after my presentations if I have a program. I always hold back because I don't want you to buy just another product. However, I have created something really, really special, and it's called Simplifying Day Trading Futures course. It's my signature course, and it's broken down into short, bite-sized videos and explanations that literally show you what I do every time I sit down to trade. And you can do it from any device, your phone, computer, laptop, iPad, and it's literally, it will be like, in essence, with me sitting with you side by side. But again, I could only make this special invite to people who get the cheat sheet to makingofadaytrader.com. So make sure that you get that link and subscribe right now while we are live. And I don't want to just give you the information. I want to actually sit next to you with you. As a special for the only, I am giving 6 months one-on-one mentorship. So like I said, how do you know you're doing it right? It's one thing, you know, listening and watching videos, but how do you know you're doing it right? So with the one-on-one mentorship where we work with your charts, you'll actually really know what you're doing and implementing. So remember, go to Making of a Day, automatically registers you to be on the special list, but only people who register for the cheat sheet, okay? And I'm giving you an extra bonus. I have a live trade chat room that I run weekly, and you will get 6 months free membership in this live trade chat room where I'm live with you, analyzing the live market and taking trades live with you, watching and understanding. Not only do you get me mentoring you for the 6 months, but you also get 6 months mentorship in the live chat room. And this isn't like me hiring a bunch of moderators. Like we all know, because I've been there, a lot of these moderators, they've never even looked at a chart before, but it's me live implementing everything I teach you and questions and implementing with me. And the only way you get this extra bonus is if you sign up right now, and it only will come to the participants of this presentation, no one else. Because the program and all that I offer is so robust with so much information, I'm giving you unlimited lifetime curriculum access. Okay, now I'm not releasing the price because I want you guys to be surprised and delight you with the value. What I will say is that it's literally less than the average of your one trade, and that is for sure. Okay, so go right now, makingofadaytrader.com. It's less than the average trade. Okay, but as with everything, there is a catch, and here is the catch. I can only take on 25 people. I only have 25 spots available. Why? Because due to my one-on-one mentorship, I'm only able to take on 25 new students so that I can give you my full attention and commit to your trading. But you have to remember, when you get the free cheat sheet, you get put on the VIP list and are eligible for the 6 months one-on-one, 6 months in the live trade chat room, and lifetime unlimited access of my Simplifying Day Trading Futures course. Now, if you haven't gotten the cheat sheet, go now and get it now. Okay, so let me know if you guys have any questions at all. All right, and I'm going to show you again how we will be doing everything in the live market. Hang on just one second here. Okay, so in the live market, this is how we watch it, right? This is what we understand. We watch. I will show you guys when there is a perfect opportunity. Like right now, here is a perfect opportunity coming along. The market has just broken through. It is now retracing to my area right here. I would be putting in my entry. And like I mentioned earlier, we want to go in short as much as long. We do not care if it's long or short, right? This is where I enter. I'm watching the market. It's completely down. Look at this massive, massive movement here. I'm looking at it to enter right here. This is what an order waiting looks like. Okay, you can start to put order waiting all the way up here or down, depending on when your trade is setting up. And we know exactly which trades are setting up. Why? Because we back tested them. We can't just be like, okay, you know what? This kind of looks good. I think I'm going to go in. No, you guys have to know exactly the kind of trade that you are looking for. Right here, I have a name for this trade. This is my 233 or 20 EMA line trade. Right here, I know exactly what it is. I look at this. There's absolutely no divergence, massive movement. Look at this huge sector between the 0 and the MACDs. Okay, entering right there. This is where you will be entering right here. Okay, this is what I'm talking about. This is what we spot in the live market. We talk about the head games that the trading can do for you, understanding what all this is, scalping, understanding how this will function, doing your due diligence, back testing. If you guys don't do any of that, I'm sorry, it's not going to happen. And the whole point of trading is to make it happen, and it can. But you have to have the proper skill sets in your corner. All right. So remember, makingofadaytrader.com. Get put on that VIP list, and let's do it. And I'm always here for you guys. Anything you need, any questions, please let me know. Okay, let me know, guys, if there's anything else. And again, thank you, Anna, so much for having me.
Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and proprietary Alpha Fibonacci system. My apology, my voice is a little down as I've already been teaching and mentoring for the previous 6 hours. And in this webinar, you will learn and see so much as traders do globally with Alpha Fibonacci system. You will learn how to trade like a hedge fund trader with Alpha Fibonacci system. But first, let me remind you, every single thing you will see in this webinar is to empower, to educate you. Nothing constitutes financial advice. All the content of the products, courses, and software for educational purposes. Nothing is solicitation or recommendation to buy any instrument. Past performance not indicative of future results. And I hope by now you understand that trading requires risk. You will never trade with risk you cannot afford. You understand that all the testimonials you will see from even an hour ago from students all over the world do not ever guarantee anyone else's performance. This is a required disclaimer. I always play by the rules. So please, enjoy the webinar with key steps how to trade like hedge fund trader with Alpha Fibonacci system. We will go over multiple examples for day trading to long-term futures, stocks, and forex in current and prior markets. You will see how traders trade all over the globe since 2011 with Alpha Fibonacci system, and most importantly, how you can trade like a hedge fund trader with Alpha Fibonacci system. This is a class I just finished. Boom, we go straight to it. These are the students all over the world. This is only in the last 2 minutes. It's only the start. Wait till you see so much more. Briefly about myself. I came to incredible country of United States of America with nothing, with newborn child in my hand, with multiple degrees already at the age of 19. Within a couple of years in the United States, I was managing top unit at Johns Hopkins, but I wanted to reach ultimate peak in the business world. I started investing. I started building businesses. By the time I was 28, I made my first million. Crisis of 2008 showed me clearly that if you decide to invest on the rules, if you decide to trade on the news, you cannot be successful. That Fibonacci is what forms the markets. This is the events of this morning. This is what you will see throughout the webinar. Proprietary Alpha Fibonacci strategy that remains the core of the system. 2011, I founded Fibonacci Trading Institute, Fibonacci Trading YouTube channel, Fibonacci Trading podcast channel. I mentor Wall Street traders, JP Morgan traders. I mentor traders all over the world. How to become ultimately successful, how to trade as top 1% does, because that's what I do. I do not allow you to remain bottom 95%. I present at hedge fund conventions. I developed systems and software. I invest based on my own method. And I mentor traders from beginner to hedge fund manager in 50 plus countries since 2011. These are the traders who invite me to their weddings. These are the traders who bring their husbands, their wives, their children, their father, their parents, their cousins, anyone. Because those who play by the rules can trade anything with Alpha Fibonacci system. From micro account in third world country to hedge fund managers in Switzerland to Wall Street managers to Middle East, choice is yours. You decide what you want to trade. Here's a system in front of you now. Days in advance with Alpha Fibonacci system, you know, institutional buy points. This is ultimate buy on S&P this morning. As trader who trades with top 1%, as trader who thinks as Goldman trader does, you've been zooming in on this ultimate institutional level. If I convert this chart to 1, what do you see? This is the power of the system. I promise you, you will never need anything else, as you will see ultimate institutional buy and sell points with precise rules that you know hours, days, minutes, weeks, months, and years in advance. All depends on instrument you trade. All depends on chart you trade. This is institutional buy level that you know months in advance. You preserve your energy. You're not wasting time on junk. You understand that buying the bottom with institutions is ultimate way to trade. But if you short it in the previous week, of course, this is where short came from. Ultimate top, bearish trend inception. But if you dealt with the end of the minor trend for days, this is the reason why. And it doesn't matter what chart you trade. Is it 1? Is it 5? Is it 10? Is it 30? System applies to all. As traders globally trade any instrument they choose on all platforms. This is my meeting with my students this morning. When you ask students what they think, they share, they speak, they inspire each other. The biggest compliment I ever received when students say, Alla's philosophy and method helped me detox and simplify my trading minds. You can be one of these traders. You learn how to think and trade as Goldman, as JP Morgan, as BlackRock traders do. I mentor those traders. That's what I do. Alpha Fibonacci trading system is a complete semi-automated system with multi-market scanner and proprietary Alpha Fibonacci software that applies to any instrument. It's a strategic, precise, institutional trend system that removes speculation and allows trader to trade markets as strategic Alpha Fibonacci chess across all instruments. For example, here's Dow. Let me remind you the events on Dow in the last few months and what played out during crisis. Here's Dow now, Dow selling off because it reached Alpha Fibonacci reversal zone. But Dow was in exact same place before the crash. Do you remember that? This is institutional chart. This is a chart Goldman traders trade. They don't get in and get out every second. They hold position for months and years because moving billions of dollars, you cannot get in and get out in a split second. But if you're trading your micro account or few $1,000 account with institutional traders, you're riding Goldman trade. You're trading only Goldman power. Here's the power of the system and why I mentor institutional traders. Here's sell-off in January. Months in advance, you know where institutional buy point will be. I've never seen anything else. In 16 years of doing this, never, ever, ever, that will show you months in advance with ultimate precision despite worst news, where institutions will step in with vengeance, where you can buy the bottom with institutions. March 23rd, Black Thursday. There is no good news on the news. Strategic Alpha Fibonacci trader knows trading on the news will never work. Trading with Alpha Fibonacci system with institutional buy point does. This is where buyers stepped in from. Let's zoom in on day trading chart. So you remember what played out on little day trading charts. Let's remember what was happening with sellers and how institutions were viciously buying on the way down. Middle March. Have you heard on the news? Multi-thousand points rally? Of course you did not. You saw it on the chart. Day trading bullish trend inception is reached. In vicious crashes, you will have spectacular rallies. This is what intelligent trader understands and knows. This remains the core. This remains the key. Ultimate bullish trend inception during the worst crisis where institutions stepped in from. Currently reached Alpha Fibonacci reversal zone. Bullish rally had ended. So if you're riding this rally for the bottom, and if you understand why buyers stepped in this morning, here's the reason why. It's day trading buy point on Dow traders, as it played out on S&P. If I convert this chart to one, what do you see? Stunning and flawless bullish trend inception. With Alpha Fibonacci system, you knew this months in advance. Charts are twins. What played out during crisis? Identical, stunning, and flawless institutional buy zone. That's how I mentor my traders to trade. A strategic Alpha Fibonacci chess across all instruments. Alpha Fibonacci trading system consists only of two components: indicator free price and proprietary Alpha Fibonacci retracement. You will never need anything else. Never, ever, ever. Here's a reminder. Take a look. If I bring up to your attention, this is S&P. This is what I start with in the course. But if I change the name, look at this. It remains the price, except on Apple, you would not want to trade hourly chart. If you're trading Apple, you're trading weekly. You know the reasons why. Price remains exactly the same. If I change this chart to pound, what do you recognize by looking at this price? If I remove the name, you would never have an idea. Is this pound? Is this Apple? Is it hourly? Is it weekly? It's all the same. JP Morgan traders do not chase indicators, so why do you? They trade pure price. And when you trade pure price, you can trade anything. This is what system based on. If you found strategy that works, it should work on all instruments. The only way you become successful when you stop thinking as majority does, because 95% in trading does not make money. When you recognize that, you start thinking as Goldman trader. Your chase is done. You only pay attention to price and proprietary alpha Fibonacci retracements. You will never need anything else. Never, ever, ever, on all instruments. Here's Carlton. Listen to his podcast on our website. Here's a text I just received overnight. Carlton struggled for 15 years. And when he came to me, he started trading for hedge fund. Look at the text message from last night. Carlton brought his friends to the course. He cannot get enough. Here's a link to Carlton's podcast. You can see what traders accomplish after searching for many years. You will never, ever, ever need anything else. So if you want to trade for a hedge fund, if you want to trade as a hedge fund trader, you must do what Carlton does. Trade pure price for entry and Fibonacci for exit. And if you do, you can trade 1, 5, 15, S&P, NQ, down, Bitcoin, Euro, Apple, Amazon, gold. You will never need anything else. This is all that matters. Let's take a look on Apple for the last 2 years and Apple now, shall we? Here's Apple. When Apple at 93, 4 years ago, Apple comes out with the worst earnings. I presented hedge fund convention, and what do I say? The most important thing, if Apple will respect alpha Fibonacci support or not. If not, it's a problem. If yes, Apple will skyrocket. Despite worst earnings in 13 years, Apple skyrocketing back up. Apple doubles in value despite worst earnings in 13 years. With alpha Fibonacci system, you know months and years in advance where Apple heading to next. After earnings, Apple heading higher. After another earnings, Apple reaches alpha Fibonacci reversal zone. What do you see at the bottom? Bullish trend inception. Exact same thing is happening on S&P and Dow this morning. So when Apple's selling off, you know where you're looking to buy. Ultimate bottom, correct? This is exact same thing that played out on S&P this morning. And it doesn't matter if it's 1 minute, if it's 5 minutes. It doesn't matter what you choose to trade. Price action remains the same. Risk management is the only difference. You're trading 5-minute S&P, you're in a trade for minutes. You trade 5-minute Dow, you are in a trade for minutes. If you're trading 15-minute Dow, you're on a trade few extra minutes. But if you're trading Apple, you're in your investment position for weeks, months, and years. And when Apple skyrockets and selling off again, there is no surprise, correct? It's a reversal zone. It's expected. This is Apple now. That's where Apple split from. Right now, Apple creating a lot of noise. Stock in correction. Buyers are weak. Buyers are worthless. Apple had done exact same thing as S&P and Dow this week. reversed from reversal zone, identified months and years in advance. That's it. Choice is yours. What you want to trade. And here's a key step of hedge fund trading. Hedge fund traders trade without indicators, with precise entry, stop and targets on all instruments. Hedge fund traders do not chase indicators, never, ever, ever. They have zero interest in junk. They have zero interest in cheap products. Why in the world would you think otherwise? The only way you become successful, if you stop the chase, the answer lies in front of you. It's in pure price. There is no stress. There is no speculation. This is all that matters. You master this, you can trade anything. And that's crucial part of the method. This is a trade with precise entry, stop and targets on S&P Emini. No speculation here. Pure price for entry and Fibonacci for exit. That's it. And a 14-year-old son of Andy can trade, so can anyone. Fathers bringing their children who know extremely well what they want to trade. Absolute maximum screen time 2 hours per day. Ken 5 minutes trading very different instrument. Scott trading stocks. Brett trading S&P. Jennifer trading gold and NQ. Her husband Emmanuel brought her to the course. You choose. This is the simplicity of the system. Listen to the podcast with Dominic and Andy. Dominic knows who he wants to be. Only hedge fund trader. If 14-year-old can trade the system, so can you. 3 weeks in the course. Despite lockdown, despite horrific events in London, Dominic can do this. And that's the power of the system on Amazon in front of you. This is Amazon 2019. Amazon stock mid-trend. What do you see ahead? Alpha Fibonacci reversal zone. So when Amazon selling off, despite best earnings in many, many years, Amazon in free fall $700 per share. You are not surprised. You know and obey Alpha Fibonacci reversal zone. And that's what continues into the next year when Amazon sold off again $400 per share. And that's the events non-stop on Amazon. You decide what you want to trade. This is Amazon in the last few months with Alpha Fibonacci system. Here it is, right now in live markets. Bullish rally overextended and price completely stuck. This is critical support on Amazon. But you knew this many months in advance. As you know, in day trading, minutes, hours, and days and weeks in advance. Identical thing on S&P this week, as played out on Amazon. Do you remember the reversal zone on S&P? Do you remember the reversal zone on Dow? Choice is yours. What you want to trade. Only difference if you're holding your position minutes, hours, weeks, months, or years. These traders trade it all. They constantly share, they constantly inspire each other. Is it Bitcoin? Is it crypto coin? Is it stocks? Is it options? Is it Forex? Of course. That's the power of community in US and globally who are choosing what they want to trade. When Scott came to me, he managed $4 million account. Few months later, his account was $6.5 million. So if you're trading your few $100 account or few $1,000 account, it shows you what's possible when you make an effort and how hedge fund traders trade alpha Fibonacci system. So if you come to the website, this is a critical part. This is crucial. Our students' podcast. You listen to their stories, you listen to their journeys. Every trader, different experience. Every trader, different account. This morning I finished class where two of the traders you see here spoke, inspiring other traders, showing what's possible. And if you click on this link and you would like to see emails I receive, as we continue uploading student stories, these are the stories from traders all over the world. That's it. Choice is yours. Do you want to trade stocks? Do you want to trade options? Which one is it? It never gets old, I promise. 20 years of trying, and this. Those are the stories of traders who think and trade as hedge fund traders. Because in the class this morning, I had Wall Street traders, I had hedge fund managers, and I had complete beginner traders. That's it. With second key step, you always strategize as institutional traders do. You always understand institutional trading range, institutional trades. You never trade without complete understanding of trading range for Bridgewater Associates, for BlackRock traders, for Goldman traders. No matter how small or big your account is, you trade with them. You never, ever, ever trade without them. And that's when you trade with confidence and power. You never gamble, you never speculate. You never, ever, ever touch day trading account without complete understanding of what Goldman traders do. And when you do, your trading becomes joy, as traders say every day. That's it. Here's Alpha Fibonacci traders at institutional levels. Trading day, a couple of minutes. This was this morning. Identical morning as you see here. Scott prefers to trade stocks. Jean prefers to trade options. Pablo prefers to trade gold. If you listen to Pablo's podcast, he was a complete trader. Now he's professional trader. He started trading live 3 weeks in the course. Every trader, different experience, different account. Traders who make an effort become limitless. They decide what they want to trade. And that's the system on Dow. And that's bullish trend inception. Pure entry, pure targets. No speculation here. None are present. So when Gerald, CME trader, joining us and says, thank you, you make trading a joy. Gerald spoke this morning with 50 other traders in the class. He becomes a legend when he says that this is the best I've ever seen in actually 37 years of trading. Listen to Gerald's podcast. Gerald trading Dow now. Before he was trading Swiss pound dollar, 800 lots. So to hear from Gerald, thank you, you make trading a joy, means a lot. And if you decide to trade oil, of course, Saudi student trades this. Here's oil, 2016, at ultimate bottom. Identical place where S&P is now. Correct? To remind you. Oil 2016, skyrocketing, heading higher. This is S&P right now doing exact same thing, except chart on oil is long-term positions. Correct? 2 years later, oil reaches bullish trend exhaustion, reversal zone next. And when oil starts selling off, you know years in advance that oil heading to zero. What would your short be like on oil if you knew that? With Alpha Fibonacci system. Let me remind you, the events of the last few months on oil. Here's a sell-off, 15. Here is your bullish reversal. And that's the power of the system. You know this many, many months in advance. Below zero. We've never seen numbers like this. Never, ever, ever. Alpha Fibonacci system identified so many months in advance. That's it. You want to trade oil long term? Because day trading not your cup of tea. Of course. Alpha Fibonacci system remains the same. So when you identify your trading range prior to trading day, every day is different. The last week had been picture perfect example. And if I bring up to your attention S&P in the last 3 days, this is a difference. This is the best institutional morning this week. This was last Thursday, last Friday. Monday was Spain. Sell-off in the middle. There is nothing in common between Thursday last week, Monday and Tuesday versus European session and US session open. And when you understand that, your trading shifts to drastically higher level. So if you want to trade gold, please do. Many students do. Precise entry, stop, and target. No speculation here. And that's what our students do with very difficult trading range. It's absolutely essential and crucial to recognize not every day is easy. Not every day price at institutional zones, not. And when you can manage challenging trading days, you are in excellent shape. The rest is easy. And if I bring up to your attention what's happening on gold right now, here is a reminder. Here's gold. Now, is anyone surprised that gold selling off? It reached Alpha Fibonacci reversal zone. Bullish trend inception on gold was in 2018. There is no bullish trend inception, traders. This institutional support is out. This is next. How to trade gold? You must know the rules. But charts are twins on where sell-off on Dow had started this week. It's all the same. Absolutely the same. Amazon, Apple, Dow, oil, gold, anything you choose to trade. With Alpha Fibonacci system, you have opportunity to buy ultimate low and sell ultimate high. That's it. You want to invest in gold, of course. With system, you know where to buy, where to sell. No speculation here. And that's the most important part. And if you decide to utilize a scanner, please do. One of the easiest and most pain relieving parts if you decide to trade on Ninja Trader. Alpha Fibonacci system applies to all platforms. System being traded globally on all platforms for the last 10 years. Software with multi-market scanners developed for Ninja 8. If you're utilizing software, your trading will become much, much easier. And when the scanner giving you multiple alerts at the same time, it's crucial, critical market synchronicity. You never have to flip charts. You never have to chase the market if you are using software. This is what software look like. You can change and add any instrument you wish in a matter of seconds. So fifth key step of the Alpha Fibonacci system, trade with supportive, like-minded traders, with experienced trader, with established system. As you can see how students price the course, they constantly say it's a multi-million-dollar system available to retail traders for few $1,000s. Currently, we're in a boot camp, traders. With these traders who spoke this morning, we're having ultimate, most incredible time. This bootcamp will not repeat for at least 3 years. I will not be teaching Genesis again. If you're fortunate enough to grab the last spot with savings up to $5,000, you have 3 months in the course. Video library, group class with incredible community of traders. But if you choose private mentoring, I work with you one-on-one in addition to all group classes. You learn ultimate strategy, ultimate setup, which you can trade as day or position trader. So if you choose any platform, of course it's available. If you prefer with software, absolutely. Next week bootcamp is done. This offer is gone. It will not repeat again. This is Genesis Trading Bootcamp. 2 software with a bootcamp for the price of 1. You can log in and view all you missed this week. And this is ultimate joy of trading with traders all over the world. You decide what you want to trade, because if you do, you will be posting this. It never ends. Thousands and thousands of emails, of posts all over the world. My students who make an effort speak to me every single day, sending emails, texting me from Hong Kong to Middle East, to Tel Aviv, to London, to Dubai, to Florida, to New York. Next year, I'm traveling the world meeting with my students. And when you say this, that's it. You will never need anything else. You are serious about trading, you came to the right place. That's it. This is what it's all about. All of this only in the last few days. So if you would like to review the information on the website, I look forward to speaking with you. Do not hesitate to call or email me, but please review first and understand. With Alpha Fibonacci system, you can trade it all. All the details on homepage, all the answers you can hear from our students. These traders are my friends for life. Pablo, complete beginner. David tried for 20 plus years. Ken, during lockdown in London, view the movie he made. Carlton, you saw his text emails. Emmanuel brought his wife. Carlton brought his friends. Brad, legends, inspiring other traders. Any questions for me? Do not hesitate to contact me. 925 257-4298 or info@fibinstitute.com. Thank you, traders, so much. You decide what you want to trade. Only now I have opportunity to look on your questions. So we have a lot of European traders who are here. It's getting very late in Europe, correct? Any other questions, traders? Please do ask. It's been a very long morning for me. And if you would like to join us for the trading room, please sign up online. All the prices on the website, please review and identify what package you want to trade. All of this lifetime license of systems and software. With current offer, you receiving 2 lifetime systems or 2 lifetime software. Choose from the package and review on the website. Multiple options available. As of 1 week from now, all the prices going up and changing significantly. None of this will be available. Only 1 space left. That's it. Absolutely. I teach and mentor this morning for previous 4 hours. Any other questions? Every single trade invests different amount of time. I don't know your experience, you decide. More time you invest, quicker you learn. Any other questions, traders? So thank you so much, everyone. It's been an incredibly busy day for me. I hope you enjoyed this webinar, and I promise you, if you'll take advantage of this, it will be one of the smartest things you've ever done in your life. It will change your trading and your investments forever. You will become one of the traders who is sending me emails and texts. And here's all the details about 4 options available to you. You decide what option appropriate for you. 2 systems for the price of 1 with Bootcamp. Bootcamp is done. This offer is gone. Only 1 space left. Any other questions? So thank you so much, traders. Thank you so much, everyone. Have an incredible afternoon. If you have any questions for me, please review all the information on the website and do not hesitate to contact me. 925-257-4298 or info@fibinstitute.com. Thank you, traders, so much. Bye-bye.